All right, there we go. Yo, what up for y'all watching this on the YouTube replay? I hope you're having a great Sunday. So, in 7 minutes, the market opens, at least in the overnight market, and we get to see how the market is doing. We'll see if the SPY is green or red. I also want to see how crypto's doing. Sometimes if we look at Bitcoin, it tells us how the market's going to open. And if I had to guess, looks like the SPY, the S&P 500 or the Qs might open a little red. But anyway, let me give you a quick portfolio update. I got some stocks I want to look at in particular that I'm potentially going to buy next week. And then we'll look at some of your stocks in the chat here. Yeah, again, hope you're having a great Sunday. Appreciate y'all being here. And check this out. Here is our kind of our risky portfolio. This is our Webull account. And we basically own a lot of risk on stocks in here. You probably heard of a lot of these names before. Like I got AMD, Reddit, Robinhood. Hey, what up, big mans? Thanks for that. SoFi Technologies, Super Micro Computers, popular one. I'd be careful with Super Micro right now. They're losing their margins. But yeah, T-Mobile, Progressive Corp. I think Progressive stock, I mean, this one's kind of a value play right now. You know, market's pretty much at all-time highs, but this one isn't. So that's why I have been buying a little bit more Progressive. I now own 3.8 shares of them. That blue line is my cost basis on that company. But yeah, another company that I'm particularly looking into is Sprouts Farmers Market to potentially buy more of this stock. So I want to start this out by going over Sprouts Farmers Market. If anyone's heard of this stock before, it's like a healthy grocery store. And check this out. I love the growth of this company. So first off, check this out. The revenue literally just hits a new record every year, every quarter. So that's what I love first off about this company. And I just love the grocery store industry. People always got to buy groceries, even in a recession. But for Sprouts Farmers Market and for all grocery stores, what you really want to focus on is the net margin. And if they're able to grow that margin, and over time, Sprouts Farmers Market has just slowly been expanding their net margin. It grew 20% year over year. So that's the impressive part. So the sales grew by 17%, but the net income, the profits grew by 40%. That's the power of the margin expansion here. And another really cool thing about this company is I believe they're debt free. So check this out on the left here. They have $260 million of cash. And yeah, total debt of $8 million. So pretty much just call it this is a debt free company. And they're buying back their own stock like crazy. You own 2.4% more of the shares than you did 1 year ago. Like look at let's go to 2020. There was 118 million shares. If you look at them on my screen, there was 118 million shares. Now today, since 2020, there's only 98 million. It's under 100 million. So that's what's crazy. That helps out the EPS, just gives you more ownership in the company. So yeah, that's why I'm potentially looking to buy some more Sprouts Farmers Market, kind of a healthy grocery store. Hey, what up, Barella? Yeah, what up, Pierre? Hope y'all are having a great Sunday, by the way. What up, Crispy? PGR and Sprouts Farmers Market. Yo, Crispy, I agree, dude. They announced another $1 billion buyback. That's awesome. So check this out. Here's actually a pretty cool company. I don't remember if Nvidia owns the stock. Let me go to the Nvidia portfolio really quick. He's talking about Nebius. Oh, yeah. So Nvidia does own this company. So check this out again. Just because Nvidia owns a stock doesn't mean you should own it. You should always go do your own research on it. And when we go do our own research on Nebius AI here, all I'm seeing is really positive things. Like, look at the growth of the sales here. I mean, literally the sales were 15 million the same time last year. Now it's 105 million. I mean, that's the kind of growth I love to see. The sales are up 600% year over year, and they have this really good balance sheet. So anyway, Nebius AI, I'm liking how growthy they are. It's like half the revenue comes from the US than other countries. They own, I'm not sure what industry exactly are they in. I don't know. They're in the Nvidia portfolio. What's in there? Oh, well, of course, we just looked at the Nvidia portfolio. Okay, anyway. So yeah, that one's interesting. So yeah, you know what? We can look at Progressive too. Let me do that one in a minute here. Let me look at FICO stock. So yeah, this is a pretty cool one, Juan. So check this out. Can you look at MR? Yeah, we'll look at that one too. Yeah, if you guys got any stocks you want to look at, let me know in the chat. I'll try to get to all of them here. So here's FICO, man. So this is the score company. Like if you ever go make a big ticket purchase, like you buy a car or a house, you're paying a couple of dollars for your little score, the little FICO score. And check that out. That's where 60% of the revenue comes from. And they've had immense pricing power. Like who cares? You're buying a $100,000 house or Well, not a well, I wish there was $100,000 house, buying $1 million house, you don't really care if you're paying $4 or $6 for your little FICO score or you in the bank. So the score business has been hitting a new all-time high, but there's also been a lot of increased competition, literally from the US government. The government is making a new score system to kind of, there used to be really no competitors. It was just them and one other company, but now they kind of have a third competitor. So that will probably hinder their future growth. But for right now, the company's looking great. They're making like 200 mil a net income a quarter. It's up 43% year over year. But I think that one's worth looking into. Put that one on your watch list. So yeah. So what up here? Yeah, let's do it. He said mRNA stock. Oh yeah, Google and Meta. Um, yeah, Meta's renting the Google Cloud business. Meta is now spending over $1 billion+ a year for the next 6 years with the Google Cloud. Incredible. So unfortunately, I feel bad if you own this stock because they are at an all-time low. And usually we can find out why they're at an all-time low by looking at their financials. So if you look at the top right, they're a $10.5 billion company. That's a bigger market cap than I thought. So, this used to be a $150 stock. Wow, they were like a $200 billion company or something. But anyway, let's see. So, I think this is like the vaccine revenue or something. I don't know. Let's go look at the sales down here. So, oh yeah, so here's the bad news here. So the sales are down 41% and they're kind of burning through a lot of money. So actually, looking at the financials, it actually explains why this stock has done so bad. I mean, look at this. They're losing nearly $1 billion in net income a quarter. I mean, and they've been doing that for a couple years now. Look, here was the pandemic. They were printing money from the vaccines, but now, since they're not really selling that anymore, it's not great for the company. Yeah, so that's why their assets just slowly trickle down. Look at that. They used to have. Anyway, I'd be careful with that one. They might slowly go lower. We really want to see them start to rebound those sales. Is this another account? Yeah, Emilio, guys. By the way, my main account, TikTok, is banned from live streaming for 3 days. I can't believe that. What happened? Yeah, hey, Braun, if you want to get this is a brokerage I'm on right here. It's in the link tree in my bio, first link there. So let's go look at this next stock right here. SoundHound AI. What up, Eggplant? Let's see. So here's SoundHound AI. This is a half. There's really one thing you want to look at. If you own SoundHound AI, there's really one thing you want to watch, and that is this subscription revenue. So this is a subscription model company, and check out the growth here. This is the one thing that has led to the crazy stock price appreciation. They used to have no subscribers, basically. They were making 400,000 a quarter. Well, now, look at these growth rates in the middle. I mean, it's at 32 million this quarter. It's up 8x or 9x year over year. At this growth rate, what's the subscription revenue going to be the same time next year? They also had a nice beat on revenue. Analysts were expecting 32 mil. They made 42 mil. That's really good, but they are still burning through a bit of money. The trend is getting a little bit worse too. So they're losing like 40, 50 mil a quarter, but luckily they've been beefing up their balance sheet from issuing some shares. So that's kind of why the stock fell a little bit. They diluted the shareholder a bit, but anyway, that's what you really want to watch as subscription revenue growth, and we kind of want to see them slowly start to trend toward net income positivity. So what up, Jose? He had HIM's stock. So there's some good news and bad news about this company right here. Bad news is the future growth of the company is a bit uncertain because a lot of their recent growth has come from them selling a weight loss prescription on their website. And now, out of nowhere, NVO, Novo Nordisk, ended their partnership with him. So they no longer sell a weight loss prescription on their website. Uh-oh. I wonder if there's any specific news we can read down here. Investigation. Oh, hey, look at that one right here. Investigation into HIMS following Novo Nordisk partnership termination. So yeah, there might be some. Anyway, let's go look at the actual financials of the company because that's what matters. I know that was in the news a little bit, but right now, the company's growth is very strong. Look at this. It's up 72% from the previous year. So that's some very fantastic growth. That's what I like about them. And, they're making a good amount of profits too. Look at this, 42 mil. They're making like close to 200 mil in net income a year. The balance sheet, they issued $1 billion of cash and the assets went up with the liabilities. So if we go look at their cash pile, that's kind of why it spiked up from just 300 mil to over $1 billion from that, from issuing some debt. But, they're in an interesting spot. So what I would again, not a financial advisor, I'd recommend putting like a small position in them, keep it as a small weighting and only really add more once you're down. If you're down like 10, 20%, if you're not down, then hey, then that's okay. You just let it ride. So here's another cool one. CME stock. What is this one? CME Group. So This might be an asset manager. I don't remember, but they're doing pretty good. Look at that. Pretty close to an all-time high. And even though the stock is at an all-time high, checked it out, or pretty close to it, you're still getting a 4% dividend. So a nice little yield on that company. The payout ratio says 100%. I guess we'll go see what that does. So they're in interest rates. That business is up 17% year over year. Equity indexes, that's up 12. Energy, agriculture, metals, foreign exchange, electronic. Anyway, it looks like a diversified company. Look at this. Let's see. So they're making $1 billion of net income a quarter. So just around $1 billion in net income a quarter. Let's go see how much the dividend cost. Let's see if that 100% payout ratio was correct. So the way you check out the dividend payout ratio is you go to the cash flow statement. And okay, so look, oh, it's calculated in a special dividend. So they must have done a special dividend. They only pay 400 mil a quarter. So the payout ratio is very safe. It's like a 50%, but they did a little special dividend that quarter or something. Anyway, interesting. All right, so let's see. Anthony said, "Can we look at EH? What is EH stock? I haven't heard of this company before. They're only a $1.3 billion company. Yeah, we can look at Duolingo, Salesforce. I love these stocks. Hey, what up, Brian? Um, let's see here. So EH Hang stock. So $1.3 billion company. Where does their revenue from? So look at that. 95% of the revenue does come from China. Oh, and they're headquartered in China, so we have to convert the revenue to US dollars. So first off, just know this is a Chinese company, but they're in the air mobility solutions industry. Hey, look at that little growth they had in 2024. That might be like drones or something. I'm not sure. I don't love buying other country. Yeah, dang. So the revenue fell 57%. I have some questions about that. Anyway, I'd be careful with that one. So here's a really cool stock I really like, actually. And I'm actually looking to buy a little bit of this stock right here. So here is Duolingo right here. You know, this is kind of like that boring language learning app program, if anyone's heard of that app before. But here's what I love about this stock. I think the fundamentals will impress you here. They're a debt-free company, first off, so they have no debt whatsoever. And look at the growth of their subscription business. This is what you want to see on a company. I mean, can you believe that? It literally just hits a new record every quarter, every year. And look at these growth rates in the middle. I mean, it literally grows 50% every quarter, every year. So crazy growth on the subscription revenue and on the advertising revenue. This business is up 55%. So who knew they were so growthy? Let's see. The free cash flow is up 60% year over year. Revenue's up 41, but net income is up 83. So again, that means they're growing their net margins. Very impressive. So, and basically what happened here, they just deleveraged their balance sheet like crazy. They paid off all of their liabilities with the cash on hand. So that's why the assets went down with the liabilities. That's no big deal at all. You really want to focus on this ratio right here, the liability ratio. It went from 65 to 36. Incredible. So anyway, Duolingo is one I have on my watch list to heavily look into to like I might even next week do a very small position in them, and once they go lower, then I'll buy more in my Roth IRA. So Faded OW said CEG stock. So that's the market opened 6 minutes ago. Wait, let me go see how the S&P 500 is doing. Forgot the market opened 6 minutes ago. So looks like the Qs are green. So QQQs are green. We do get Nvidia earnings in 2 days. Nvidia's up 1, Tesla's up 1.3. Let me go check out the Webull portfolio. Sorry, then we'll get right back to the analysis. Let's see what is up. Wait, this should be open. Oh, yeah, there we go. So look at that. SoFi's up 1.4, Disney's up, anything down, Reddit's down a little bit. Anyway, we'll come back to this. There's not too much volume yet because the market literally just opened a couple minutes ago. But we were talking about CEG, Constellation Energy. So this is a company I do own, and I might be biased, but this, in my opinion, is the best way to get exposure to nuclear energy. They're the largest nuclear energy. They own the most amount of nuclear energy reactors out of any other publicly traded company. 55% or 50% of the U.S.'s. And anyway, I'm getting a little dividend from them too, a little $5 dividend. But anyway, that's the best way to get exposure to nuclear energy, in my opinion. Great company. I've made a lot of YouTube videos about that one if you want to check that out for more. So anyway, let's go look at these one here. Rich said, can we look at NEO? So I feel bad if you own this stock, to be honest with you, but I'm going to just give you my honest thoughts here. Again, I'm not an expert, not financial advice, but let me tell you why I think NEO is a tough buy, especially after this 15% rally. So I'm not actually too sure if there was any specific news. Actually, here's how we can tell. NEO launches, I don't know. I'm not going to read all that. But anyway, there was some sort of news where they're up 15%. Here's why I'm not too interested in this company. First off, they're Chinese, so it's a Chinese stock. But look at this market cap up here. It's a $14 billion market cap. So kind of remember that. The whole company's worth $14 billion, and you're buying a business that loses, I mean, like $1 billion a quarter close. So, I mean, lost 930 mil this quarter. 980 mil last quarter, then 700 mil, 700 mil. So these net income losses are the only reason I'm staying away from this company. And with these net income losses, look what that did to their balance sheet. They now have the exact same amount of liabilities as they do assets. So, these net income losses, the money has to come from somewhere. They're also diluting you. I have no doubt, just like they did up here on this rally, they're going to dilute you again. What? Because the stock, they have to. Anyway, I hope the best for them, but I'm just staying away from that one. Yeah, well, the overnight market is open, the actual real time, but we can basically see how stocks are moving. There is volume. So technically the market is open. Like I could buy 100 shares of Google right now if I wanted to, or sell all my shares of Google. So there is liquidity right here, which is pretty cool. Let me see. Is there any more volume? Dave is up 3. It looks like the fintechs are doing great. SoFi's up 1.5, Futu, Disney. Pretty cool. So, let's go look at some of these other stocks here. So, what up, Jeff Mack? How's it going? So, bullish CEG. Yeah, I love CEG. No way, Louise. Thanks so much for the 30 roses there, Louise. If you got a stock you want me to look at, let me know. I got you. So let's look at Intel right here. Someone said Intel's up right now. I wonder, they probably are. So basically, Intel just got a huge investment from the U.S. government. They finalized the stake. So the U.S. government now owns 9.9% of Intel, or pretty much 10% of all the shares. So if it weren't for that news right there, I wouldn't even be talking about Intel, because that really is game changing. Because before this news, they're burning through money. This definitely wasn't a stock you'd even want to buy before this, but now that the government took a stake, that's actually pretty game changing. So I think it's worth looking into as a small position, maybe a very small position in your portfolio, because there's a lot of good things that could come from that. So let's see, what's this one? THMC. Let's find out what this way. So I can't find that one, Jeff Mack. Let me know if you're talking about TMC. Can't find that one. So someone said, yeah, what up, BW? He said, I'm thinking about buying Novo Nordisk tomorrow. So yeah, not financial advice here. Oh, no way, Jose. Thanks for all the roses there, dude. I really appreciate that. Oh, he said Redwire Lucid. Okay, bet. Give me, what's the ticker symbol for Redwire? Or I'll find out what it is. But we'll check those out after this. Thanks again for all the roses. So here's Novo Nordisk. This is that weight loss company. So if you've heard of Wegovy, if you've heard of Ozempic, this is the company that owns that. Elon Musk is on Ozempic. But look at this. 93% of the revenue comes from their obesity care products. So it's basically a pure weight loss prescription plan for right now. They're printing money. I mean, it's up 45% year over year. They made 4.2 billion in net income. I mean, they're pretty much making over 4 billion in net income every quarter. You get a 3.5% dividend. But one thing that's really kind of been putting some way on their stock price recently is that their patent for Ozempic expires in 2 years. So that's not great. FDA grants Wegovy approval. I like looking at the news sometimes right here, because sometimes there's something interesting. But anyway, they're interesting. So let's see. RDW. What is Redwire? Let's check it out right here. So this is a pretty small company. This company's only worth 1.3 billion. But yeah, let's go look at their financials right here. Let's see here. Revenue is, so this might be why the stock fell on earnings. So they gapped down on this day because of earnings. And here's what they reported. The sales, the lifeblood of the company, the revenue is down 21% year over year, and they lost 100 mil of net income. Let's go see what the analysts were expecting. So yeah, look at this. Analysts were expecting 80 million of revenue. They missed by a big chunk. They missed on the net income losses, huge net income losses, and EBIT, bro. This was the real loser here. So I actually can see why this stock just fell a bunch. Look at this though. I do notice something just happened to their balance sheet. They lost net income this quarter, so they must have rose some cash either through diluting you as a shareholder, or they rose some debt. So, so they did. They rose basically 270 mil of debt, or they diluted you. That's interesting. But anyway, I would be careful with that one, just because of the revenue's down and the net income's down. So, my fault there. TMHC. Sorry. Oh, that was my fault. I really okay. So sorry about that. So here's Taylor Morrison Home. Let's check it out. First off, I'm going to just guess that this is a home builder. They have the word home in it, but just based off this low PE. So this is a $6.9 billion company. I've never heard of them before. So home closings revenue. So let's see here. Revenue's up 2%, net income's down by 2. But look at this. That's normal for this industry right now. They're making 200 million plus in net income a quarter, and no dividend on this company. That's surprising. So, yeah, they're trading at 8 times net income. The industry average is an 11. Let's see what some of their competitors are. Like, yeah, Lennar, DR Horton, yeah. So they're really related to the home builders. So anyway, they're making 200 million net income a quarter. Are they doing buybacks? Wow. So check this out. So this company's making 200 mil of net income a quarter. What are they doing with all that? Well, look at this. They're basically spending 100 million of that every quarter, just buying back their own stock. And here's what that does for you as a shareholder. So look at this. The net income is down by 2%. So net income's down by 2, but net income per share is up by 3.2. That's the power of the share buybacks. The share part of the ratio is much lower. Pretty cool. So Ravid said CoreWeave. Yeah, man. Hey, I'll be quick about this one. CoreWeave is actually a stock owned in Nvidia's portfolio. As we know, Nvidia owns a big chunk of CoreWeave. So there is good news and bad news about this company. They did just IPO, so there's not too much history here. But for the history we do get, this is incredible growth. I mean, look at this. The revenue went from 390 mil to 1.2 billion. That's a 3x increase year over year. So they're growing their sales incredibly. Unfortunately, they're still burning through net income, losing a couple hundred mil a quarter. Interestingly, though, the operating profit was positive. So I wonder what these one-time adjustments are. Maybe they're IPO fees or something. I don't know. But I can kind of see the light at the end of the tunnel here. The valuation's still pretty high, but yeah, $45 billion company. Sales are going really fast. They're interesting. I don't dislike them. So I dislike those net income losses, though. But let's see here. Louise said, I started a position in UNH at $450. Nice. Hey, so United Healthcare was actually just bought by Warren Buffett. So if you're wondering what was this huge gap up right here for, you can thank Warren Buffett for that one right there. I wonder if there's any specific news here. Nope. Major cybersecurity breaches. Okay, doesn't matter. So anyway, no news recently, but Warren Buffett did buy a lot of this stock. And Warren Buffett always does his due diligence before he buys something. But that's why the multiple is so low right here. They're trading at 13 times net income. Here's the thing. The reason the multiple is so low is because the net income is expected to collapse another 50%. So look at this. In 2 quarters, the analysts are expecting only $1.70 of net income. And just the dividend cost $2.20 of net income per share. So it is, the future's a bit uncertain, but I think this one's worth nibbling on too. They're really cheap. 3% yield, Buffett bought a bit. But that being said, I wouldn't buy it here. I kind of want to see them potentially go where this gap is, maybe under $300. And when I do buy them, I wouldn't buy it as a big position. I'd keep it as a pretty small percent of your portfolio. So someone said, can you do Zeta? I think it'd be quite risky. So yeah, so not Meta, but we got Zeta right here. So Paramount. Oh, hey, yeah. Hey, what's the ticker symbol for Paramount? Didn't they just merge with Skydance or something? I don't know if they're public anymore, but here's Zeta Global. This is a $4.6 billion company, and they just gapped up on earnings after a huge beat. So look at this. They gapped up. They were up 7% on Friday. Very nice. So yeah, if we look at this, they beat on revenue, they beat on net income, and they beat on EBIT. So it was a triple beat quarter. I love how growthy they are. I mean, look at this. After the sales grew 32% the previous year, the sales are up another 35%. And if we look at the net income, it's narrowing at a faster rate. The net income losses are down by 55%. This is great news. They also have a really strong balance sheet. So actually, I really like Zeta. I do like that one. So yeah. Hey, what up, JVM? Hey, I technically do have one JVM in the description. But let's see here. Yeah, if you guys got any stocks you want to look at, let me know. I'll check them out for y'all. Jane said, PSKY. Oh, wait, Paramount Skydance. So yeah, they got approved for the merger, I'm assuming this day right here. So Here is Paramount. Hey, Jose, thanks again for all the roses. Yeah, let's look at Lucid and Big Bear AI. We can look at those. Though I don't have too much good things to say about those two, but because those are pretty risky. But here is Paramount Skydance. So we can expect the future revenue to increase after the merger. Let me actually see that in the analyst expectations. So yeah, look at that. It's like revenue is expected to go up a bit. But yeah, it's before this merger, the company wasn't doing too great. I mean, the sales were only up 0.5. They even well, actually, they are making a good bit of net income every quarter, but they have a lot of debt. But yeah, they're in the TV media business. Not yeah, like look at this. The sales are down 6% year over year on that business. So TV media business is down. Direct to consumer, their streaming business though is doing pretty good. That's up 15% year over year. That's the Paramount like actual like Netflix kind of subscription there. So anyway, that they're interesting. My side of the bed is I kind of own Disney. I actually own a different streaming service company. How are they doing right now? So yeah, we're up 40% on Disney. They're up 0.35% in the overnight market. Yeah, let's see how the market's doing real quick. So it looks like Zoom, Reddit's down, and Futu, SoFi, Disney, AMD are up right now. Actually, let me also check the main account here. So, how's the market doing? So look at that. SPY just went negative, and the Qs are only up 0.004 now. So market's slipping a little bit. SoFi's still up though. Huh. Anyway, we'll come back and look at that a little later. So let's keep going here. Can you do BMNR? Yo, what up, Danny? Let's do it. So let's see, BMNR. Oh, that's Bitmine. Oh, hey, this is the company that Tom Lee just started working for. So this is basically an Ethereum state or Ethereum holdings company, basically the Ethereum version of MicroStrategy. If we look at where the revenue comes from, basically revenue from self-mining. They mine some crypto as well, but basically, you just want to come. This one just trades off it's a Ethereum proxy, and it trades off its net asset value of all the Ethereum that they own. They dilute the shareholders, raise cash, and then buy Ethereum with it. That's been the right move so far because of how growthy Ethereum's been, but pretty cool if you want an Ethereum exposure. Hey, what up, Sean? Buying NVO. Hey, nice. So let's look at Lucid right here. So to be honest with you, I feel bad if you own this stock right here because I don't think it's worth buying, even on the dip right here at $2. So right here, this gap up right here, Uber bought $1.25 billion worth of cars from Lucid. So they got a huge purchase order from Uber, but the stock just hit a new all-time low because after this little rally, they diluted you as well. So here is why Lucid is diluting you, and here's why I can't trust this company. I think there's a small bankruptcy risk here. So if you look at this market cap in the top right here, the whole company is worth $6.24 billion. So kind of remember that number. The whole company of Lucid is worth $6.2 billion. And look at these losses right here. They lost nearly 600 million just this quarter, which is 10% of the market cap. 400 mil the previous quarter. So these net income losses just make it tough right here. The fact that they're losing a boatload of net income. Yeah, that's kind of why the stock is tanking so much. So how about PayPal? What up, user 96? Let's see, PayPal. So this is a huge buyback play right now. Unfortunately, PayPal has been flat for a while. Like PayPal is lower than it was back in 2017. And because of that, they're buying back their own stock like crazy. But here's one reason why the stock has kind of declined a bit. They're not growing as much as they used to. Like sales are up single digit, 5% year over year, 1% the previous quarter. But here's the good news about this company. The one saving grace here is that they're printing money. They're pretty much making, look at that, 1.2, let's just call it $1 billion of net income every quarter. So what is PayPal doing with just over $1 billion in net income every quarter? Well, they're actually buying back their own stock like crazy. If we go look at this right here, they literally spend $1.5 billion in net income every quarter buying back their own stock. What is my point here? What does that mean for you? Well, look at this. The net income is up 11%. So net income's up 11, but net income per share is up by 19, man. 19%. They have bought back 7 to 8% of all the shares that exist in just a year. So that's one really interesting thing about PayPal. Can you do U? What is this one? Energy Fuels. So I think this is a uranium play, of course. So yeah, look at that one. They're up 12% on Friday. I wonder, are they Canadian? Well, look at that. They're very diversified. So that's good. Recently we're starting to order a lot more uranium from like Canada and Mexico instead of Russia. We used to get a lot of uranium from Russia. So basically, if you want exposure to uranium, check out just the Global X Uranium ETF, ticker symbol URA. It's been doing pretty good recently, but to be honest with you, I'd kind of just prefer to pick and choose my own uranium names. If I had to pick one, I, out of all of them that exist, I would always pick ticker symbol CCO. This is my favorite one out there. They're Canadian, but great uranium play as well. So let's see here. A firm. So they report earnings. Let's see. Plug. What's that one, Mark? Give me the ticker symbol, and I can check out y'all stocks for you. But yeah, here's a firm right here. This is that buy now, pay later company. And yeah, they report earnings on the 28th, which is the day after Nvidia reports earnings. So in 3 days, they report earnings. Oh yeah, we can look at Fortinet and Novo Nordisk. We kind of just looked at Novo Nordisk, but we'll still look at them again. But here's a firm. This is that buy now, pay later company, and they're finally getting net income positive. And they've been so growthy with their revenue. So, like, look at this. It just hits a new revenue every year, every quarter. But revenue, look at this right here. They used to burn money. They used to lose 100 to 200 mil in net income every quarter. Well, now in the 2 most recent quarters, they've actually made net income. So that's great news. And analysts are expecting them to continue that net income positivity. They're expected to be positive in net income from now on in the future. So that's great news. But do beware, if we go into a recession, the buy now, pay later stocks will see some trouble. What brokerage app is it? Yeah, hey, Crash, by the way, this is not Webull. If you want to get this little brokerage I'm on, it's in the link tree in my bio, very first link there. It's a brokerage called, or you can just type it into Google, it's a brokerage called Moomoo, but it's an affiliate link. So if you sign up and deposit $100, we'll both get 5 free stocks. So let's see here. Ticker, hello. Yo, Denise, I can't cover that stock because of the industry they're in. Bro, phone. Okay, there we go. Yeah, unfortunately, if you got another stock you want me to look at, let me know though. Last time I covered a stock in that industry, TikTok took down the stream. By the way, I'm streaming on my second account because TikTok banned my main account for 3 days. Not great. So the best way to support me is subscribe to the YouTube channel. I'm streaming on there as well. But anyway, here's Plug Power. Unfortunately, this stock is at an all-time low, and they kind of deserve it as well. And here's kind of why. Look at the top right here. You see this market cap? They're a $1.94 billion company. So if you buy this stock, you're buying into this company at a 9, or what was the valuation? Or a $1.9 billion valuation. You're buying a company that literally loses so much money. 200 mil this quarter, 200 mil last quarter, 1.3 billion this quarter, another 200 mil. It's just for eternity. They just lose hundreds of millions in net income every quarter. They dilute the shareholder while the stock's at an all-time low because they have no other way to pay off these net income losses. So in my opinion, any rally this stock goes up, the company will dilute you. It's just a company, in my opinion, I don't think you really want to buy the dip on. But what is this one? Nicholas said OSS stock. Oh, yeah, we got to look at Novo Nordisk as well. And then Fortinet. Yo, I love Fortinet. So great cybersecurity stock. So this is a One Stop Systems. Have not heard of this stock before. So yeah, very small market cap. We don't really like to cover these kind of names. This company's only worth $120 million, but we'll look at them nonetheless for you. So they do 14 mil of revenue a quarter, not great. It used to be 18 mil a quarter. So the business struggling, they're still losing net income every quarter. To be honest, nothing's really blowing me away here. They're not too growthy. But anyway, they're just a really small company. So let's look at Fortinet right here. So this is one of my favorite cybersecurity stocks out there that's actually at a decent valuation. All the other cybersecurity names like CrowdStrike, Cloudflare, they're not making that much money, but here's a company that's making a lot of money. So I love subscription model companies, and check this out. 40% of the revenue comes from their subscription business, and it literally just hits a new record every year, every quarter. It's very impressive. If you look at it on an annual basis, look at this. It just hits a new record every year, every quarter. So super growthy on the subscription business. The reason the stock fell is because they missed on their guidance. Their actual numbers were good. They beat on expectations, but they gave bad guidance, which is really what is hurting stocks right now. It plummeted ASML on their fantastic earnings and Trade Desk and some other ones. But anyway, look at this net income. They're making 400 or 500 mil in net income a quarter. It's incredible. What about the FCF, which stands for free cash flow? Yeah, look at that. Making a couple hundred mil of free cash flow every quarter as well. And they don't pay a dividend either. So I think, let's see if they're buying back their own stock. Probably not, but yeah, they bought back 1% of the shares. Not too bad, actually. So BBAI concert. Hey, thanks again, Jose, for the roses there. Unfortunately, man, I don't have any good things to say about this company. This is kind of, in my opinion, just a meme and momentum stock right here. Yeah, Chris, here's the honest opinion about this stock. So look at this market cap right here. This is a $2 billion company. So remember that. This whole company's worth $2 billion, and this company lost $200 million of net income just this quarter. So that is over 10% of the entire company. They've lost in net income just this quarter. The quarter before, 70 mil, quarter before, 150 mil. And look at this, all those net income losses for a business that's declined. The revenue's down 19% year over year. It was a huge miss on the earnings. Look at this. They were expecting 40 mil. They only reported 32 mil. So, my opinion, I just can't buy that one, man. Those net income losses scare me. And that's kind of just my little looking at their financials. They definitely could improve in the future and still could be make money on that, but I just stay away. Yo, DG, good to see you too. Hope you're all having a great Sunday. Yeah, so Nvidia earnings are coming up. Oh yeah, then we got to look at Novo Nordisk. Yeah, let me look at Nvidia real quick. So here is Nvidia stock. So they report earnings on the 27th. Today is the 24th. So, okay, in 3 days, Nvidia reports earnings. And how are they doing in the overnight market, by the way? So the market is open right now. Nvidia's up 0.8%. Ooh, the SPY went negative. But anyway, let me give you some analysis on Nvidia because this one's really interesting. Obviously we know they sell GPUs. They have a 20% PC GPU market share. They have this automotive software that Lucid is using right now. But most of their revenue comes from the data center business right now. And that's a genius industry for Nvidia to be in. As you know, these data centers need GPUs, and NVIDIA makes their own GPUs, so it's genius. And look at this. This is the reason why NVIDIA deserves all the hype around the name. I mean, the business, in 2021 was $6 billion of annual revenue. Now they do it in fiscal year, but for the fiscal year 2025, it's $116 billion. I mean, what other company, look at these growth rates in the middle here. I mean, what other company has pulled this off? And not just sales growth, but also profits. I mean, look at this net income right here. I mean, they're pretty much making 20 bill of net income a quarter. And it's growing every single year. So I think NVIDIA is worth just owning for the long run. Like a good just never sell stock. Hey, what up, Catherine? So Glue said CGTX, Cognate Therapeutics. So yeah, $200 million company. They were up 41% on Friday. There must have been some good news, right? I don't know. I mean, maybe I could check the comments here, but $200 million company. So yeah, here's my guess, okay? So we look at the revenue. This is a revenue-less company right now. So if you go to the revenue, it says no data because they've never sold anything. They've never sold a product or a service. My guess is they're up 41% because they maybe got FDA approval to maybe finally sell a product or something. Well, here's a company. Yeah, let's get back to Novo Nordisk right here. Oh yeah, then we can look at the Honest company. So Novo Nordisk right here, again, this is that weight loss prescription company. If you've heard of Ozempic, Elon Musk is on Ozempic. This is the company that owns that. So if we look, 94% of the revenue comes from their obesity care products. For right now, the business is printing money. I mean, literally 4.2 bill of net income this quarter, 4 bill last quarter. They're pretty much making over 4 billion in net income a quarter, get a 3% yield. One reason the stock has been struggling is because they lose their exclusivity for Ozempic in 2 years. So basically in 2 years, their patent is expired. So the future growth is hurt a little bit. But for right now, the business looks great. And I think that one's worth looking into. But that's one of the reasons. It's already priced all that in, I feel like. It's already priced in all that bad news, or majority of it. So SBET, I think this is I don't think we can cover that. We can't cover that one, unfortunately, because of the industry. TikTok might, unfortunately, yeah. Let's see. Let me double check. Maybe not. Wait, Ethereum staking. Ethereum staking is 5% of the revenue. So I don't know, man. I mean, let's see. So they have no sales. The sales are 600,000 and they're down 30% year over year. They lost 100 mil of net income, but I'm guessing that was from diluting the shareholder 100 million. And that's exactly right. So this is the sole reason the stock is rallying. They basically just bought a bunch of Ethereum. Ooh, yeah, I'd be careful with that one. So, I haven't looked at this stock in probably a year plus. Let's see how they're doing since their lawsuit. So here's 3M. They own a lot of random, like Post-it notes and stuff like that. Velcro. One of their employees, actually, Velcro was invented at 3M. One of their employees created it as like a project, and then they patented it. Anyway, I don't know the full story, but here's the thing. So the revenue's up 1.4, kind of a slow, boring, growing business. Revenue's up 1.4, net income. Look at this. This is the good news. They're making a lot of net income every quarter, 700 mil to a billion. They cut their dividend, but that was the right thing to do. You get a 2% yield here. They're doing share buybacks. They've bought back 2% of all the shares in the past year. But again, nothing's blowing me away there. I don't really expect like 3M to outperform the QQQ. But yeah, let's look at the honest company right here. This is a very small one. There's some good news and bad news about this stock. So look in the top right here. So again, $400 million company, or the whole company is worth $450 million. This is the one good news. They actually have no net debt. They have about, after excluding the little bit amount of debt, they basically have 60 million of net cash. So they have 60 million of free cash, leftover cash after all, they paid off all their debt, and the whole company's worth 450 mil. This is the one bad news, though. Investors didn't love the business. The sales are only up by zero point 0.4. I mean, that's not good. I mean, we really wanted to see more growth. So the sales are only up by 0.4. But good news is they're making net income every quarter. So 4 million this quarter, 3 million last quarter. That's great news when you're only worth $400 million, excluding the cash. So they're interesting. I just want to see more growth. What that company does, they mainly just sell like healthy like diapers and wipes and stuff like that. That's 70% of the sales. What is InPost? Hey, give me the ticker symbol. I don't know what that is there. InPost. Yeah, hey. Jason said AEIQ. What is this company? Wait, AIEQ. Okay, so AI powered equity ETF. So look at that. So basically, this is an ETF. It's a basket of stocks. Let's see what they actually hold in their portfolio. So let's go. Hey, what up, Ray? I appreciate you, man. So look at this. They own Nvidia, 7%, then Microsoft, then Apple, then Meta, Google, Amazon, then GE Veranova, Skyworks Solutions, Eli Lilly. So it's really interesting to see, 10% in healthcare, then 10% financial. They're interesting. So yeah, that's an ETF right there. So let's see. AEY stock. What is this company? Let's check AEY. I can't find that ticker symbol there, unfortunately. There is no AEY. So someone said WULF. What is this one? So TeraWulf. Oh yeah, I believe this is like a Bitcoin mining company or something like that. Is there any news here? TeraWulf secures $2.3 billion Google investment and expands data center to 360 million. So that was the reason the stock had rallied so much. I remember they had some huge partnership with Google. So that's pretty cool. But look at this right here. Oh, so this is what I remember. 100% of the revenue right now, it says, comes from digital currency mining. So that is interesting. So 3.2 billion is a big number. So Estate Lauder. Oh yeah. So let's check this one out. Estate Lauder. Oh yeah. What up? We can look at Super Micro as well, and Applied Materials. Let's do it. What up? Yeah, hey, by the way, I'm on a brokerage right here where you buy stocks and stuff. If you want to get this little brokerage I'm on, is in the link tree in my bio, the very first link there. Affiliate link too. Or you can just type it into Google. It's just brokerage called Moomoo. But anyway, here's Estate Lauder. This is a beauty and cosmetics company. And one reason, like if we look at them on the weekly, this stock is lower than it was in 2017. That's because they lost their growth and they're losing some market share. Like, look at this. Their organic sales growth is actually negative 13%. So not great. But here's where the revenue comes from. 50% comes from their skincare, then the makeup, then fragrance business. But this is another bad thing. They're kind of losing a lot of money right now. Look at that. 500 mil this quarter. They did make net income last quarter, but then another 500 mil. So we really want to see these losses start to narrow. And the total revenue, so revenue is just down 12%. We really want to see the growth come back. Yo, try not to spam there. Hold on here, brother. Appreciate you. So let's see here. Super Microcomputer. I do own this stock, by the way, so I might be biased, but check this out right here. Where is it? Okay, so here it is. Here's why, in all honesty, I do own this one and I like the company, but I can't buy this one at 43. Like, I need the stock to go a bit lower. Like, honestly, I need to see it go below $40 before I consider buying more shares. And so here's why I would wait to buy the dip on Supermicro. It's because they're losing their margins. They're giving customers bulk deals. So check this out. The sales, they have crazy sales, but the sales are up 7.5. So revenue's up by 7, but the profits, the net income, are down by 35. So that means they're losing their net margins. The margins collapsed 38% to just a 3.4% net margin. So that's the one thing that does concern me and why I'd be slow to buy that one. Oh yeah, I wanted to look at AMAT. Yeah, Applied Materials. Let's do it. So here is Applied Materials. This is a $130 billion company, and they gap down on earnings. So let's go see if we can figure out what happened to their earnings. So they beat on revenue, they missed on net income, but they beat on EBIT. Looks like the next 2 quarters, for some reason, the EBIT's expected to like drop off. I wonder what that is. But anyway, the sales are up by 7. Net income's up by 4, so they did lose their margin a bit. But still, this is a company with 25% net margins. You get a 1% dividend yield here. What's the PE? Yeah, they're trading at 19 times net income. Very fair valuation. Whatever. Yeah, hey, by the way, I'm on a brokerage right here where you buy stocks and stuff, Cricket and Dip. If you want to get this little app I'm on, it's in the link tree in my bio, very first link there. It's just brokerage, or you can just type it into Google, just a brokerage called Moomoo, but it's an affiliate link too. So if you sign up with my link there and deposit $100, I'll both get 5 free stocks. It's an affiliate link. So full disclosure, it does help me out. But anyway, let's keep going here. BLSH. Hey, didn't that company like just IPO? The BLSH IPO. Hey, what up, German? Good to see you. Happy Sunday. So the bullish IPO, they're a $10 billion company. Yeah. Hey, by the way, best way to support the stream, hit the like button. So they just IPO'd. So again, there's not too much data we get. So yeah, look at this. We literally have basically no data here. 2 quarters. This looks like the sales are down by 0.2 and they lost 300 mil in net income. Anyway, I wish I could give you more thoughts on them, but unfortunately I can't. So anyway, how do you check share buybacks? Yeah, here, I'll show you that. So what's a company that I know does share? Let's just go to Google right here. So here's Google. Basically, here's what you do. Here's the net income. They made 28 bill of net income. All you do is you go to the cash flow statement. You scroll down here and you can see the stock buybacks at the top there. So they're spending 13 to 15 billion of share buybacks on their share buybacks a quarter. Here's another way to see the share buybacks. I'll be super quick about this. You see the year-over-year growth rate. So the net income's up by 19. But if you just go to the EPS, which is net income per share, if you see that the EPS is higher than the net income, that means they bought back their own stock because the EPS is just net income per share. And if there's less shares that exist, that makes the EPS go up higher than the net income. Sorry if that's not confusing, but by the way, if you missed anything and wanted to kind of replay that, I'm streaming on YouTube as well. My YouTube channel is called Nathan Roberts. Also in the link tree in my bio, you can replay it. Also, when the stream's over, you can replay it. But anyway, yeah, hey, that was the buybacks. So let's keep going. Thoughts on Robinhood and PSIX. Look at PSI. Yeah, hey, PSIX is one of my newest purchases. Someone just mentioned. How's the overnight market doing? Stocks are pretty good right now. So yeah, I do own this company, by the way. I might be biased, but this one's been a pretty monster performer. Here's what I really love about this stock. Here's why I didn't mind buying them at all-time highs. Their net income just popped off. Look how growthy they are. This is what I look for in a company. Sales are up by 73, net income's up by 137, expanding their net margins. They're making net income every quarter. They're deleveraging their balance sheet. Asset to liability ratio is only at 69%. So anyway, how come you got 2 accounts? Yeah, hey, by the way, my main account on TikTok is banned for 3 days from streaming. So that's why I'm on the second account. So, all right, so let's keep going here. Hey, what up, Fern Mac? Good to see you, brother. Yeah, they tried to catch the iconic wave and bomb. Hey, what up, Fermax? So someone said, Felipe said Main Street Capital. So this is one of the few stocks that actually pay a monthly dividend. So if you're a dividend investor, not many people here are probably, and I'm not exactly one either. I like the more growthy names, but this is one of the stocks I did buy, actually. I do own, not much of it, but I have $500 of the stock. They actually one of the few companies that pay a monthly dividend. So if you're looking for a stock to pay monthly dividends, this is a pretty cool one. And the dividend is actually safe. And here's how you can kind of check that. So for every share that you own, you get 25 cents of dividends a quarter, or a month actually. So you get paid 25 cents a month. That costs 78 cents a quarter. And look at this, they're making over $1 of EPS a quarter. That's how we can tell that the dividend's safe. So anyway, that's a dividend play. They have like a 5% yield. I do own them in my Roth, so I might be biased, but Yeah, Teddy, you nailed it, man. How'd you know, Teddy? So, Calvin said, "Hey, remember BWA? I don't actually." So, Borg Warner, I've not heard of this company before, but let's check it out. So, this stock, so if we scroll out on the monthly here, this stock is the same price that it was back in 2013. So, you bought the stock in 2013, it's the exact same price that it is today. But if you bought the stock recently, look how they're doing. I mean, they've had a pretty monster performance the past year here. Let's see if we can figure out why. So, they do turbos and thermal technologies, uh, drivetrain and more systems. They sound pretty niche. Power drive systems. Well, let's see. How's the business doing? So the total revenue. So I'd like to see higher growth here. But revenue's up by one. They're making about 200, 300 million in net income a quarter. They pay a dividend. They have a 1% yield as well. Anyway, they're interesting. They have had a really good performance. They're in the aerospace and defense industry. Was that PSIX, the monthly dividend? No, the monthly paying stock was MAIN, Main Street Capital. They actually have to, by law, pay out 90% of their taxable income in the form of a dividend. These don't usually outperform the market in the long run, but so if you're like, dang, 6.4% yield, is that sustainable? It technically is. And there's the payout ratio, 70% payout ratio. It's covered by the net income. So anyway, that's I believe my highest or second highest yielding dividend stock. Surprisingly, and I didn't realize this when I bought the stock. I bought them because their financials were so good. T. Rowe Price Group. If anyone's heard of T. Rowe, they're like an asset manager. They have a lower yield, but a 4.7% dividend yield, and they have a low payout ratio. Okay, let's see here. Sweet Green. Oh yeah, let's check out Sweet Green. So this is kind. Oh yeah, so sorry, BW. We got to check out the IN in post. So we'll do that after this. So here's Sweet Green stock. So unfortunately, they've been missing on analyst expectations. I actually heard of this company for the first time like a week ago. They sell like healthy salads. They're like a Chipotle kind of business, but unfortunately, they've been missing on expectations. Analysts were expecting 191. They only reported 185. They missed on their net income as well by 40%. So the losses were worse than expected. They're losing like 20, 30 mil a quarter. All for a business, the sales are only up by 0.5. So I can kind of understand why this one's struggling a bit. We want to see them kind of grow more and get closer to net income positivity. So INPOY. So this is an ADR. So we'll go find out what country this is from, but let's see what they are. So, I should know what country that is. Anyone? PLN. You know what? Here's how we can find out. They're from Poland. Okay, so check this out. Most of the revenue comes from Poland, and that's interesting. Let's see what they do. Automated partial machines, Mondial relay, something to door. Okay. Revenue. This is good growth. So the revenue's up by 25 after growing 25 the previous year, but the net income did grow. So they had a little one-time adjustment. So basically, they're making 100 mil plus a net income a quarter. They're interesting, Poland Aerospace Company or something. Now I like AXP. Is that American Express? You know who owns American Express? You know who also agrees with you is Warren Buffett. Warren Buffett, actually, also we can see Warren Buffett's recent moves. He's been buying. This was the most recent quarter. Literally June 29th. That was same UNH buy, or no, I'm not seeing UNH on here. Oh, if I go to new position, here's the new position. Warren Buffett bought 5 million of anyway, doesn't matter. He's a super investor that he has to reveal all his trades by SEC law. And his second largest holding is actually American Express. And check this out. Here's what I really like about this company. First off, you get a 1% dividend yield there. So not too shabby, 1% dividend yield. And look at this. The stock's at an all-time high pretty much. Here's why I think it has the ability to go a bit higher. The PE is only a 22. I feel like this could stretch up to like a 25 before it really gets ridiculously overvalued. So that's what's interesting about American Express, and they're making a lot of net income every quarter. So anyway, that's the Buffett portfolio. You can you can see Nancy Pelosi's portfolio as well and like follow them in the trade. Yeah, hey, Burnell. Yeah, again, this is a brokerage right here. We buy stocks and stuff. If you want to get it, it's in the link tree in my bio, very first link there. It's also an affiliate link, so or you can just type it into Google. It's just a brokerage called Moomoo. But full disclosure, We'll both get some free stocks if you sign up with my link, so it'd help out the channel. Someone said SSYS. Let's do it. So this is Stratus. So unfortunately, this stock is not doing too good. They're the same price as they were back in 2003. So that's not great. You bought the stock in 2003, you're down on your position slightly. So they're only a $900 million name. Let's go see if we can figure out what happened to this company. Why is the company collapsing? Looks like they just lost their growth. So it is, they're losing net income every quarter, but that's not too bad. The sales aren't growing, they're declining. Pretty good balance sheet though. Let's see how much cash they got. 250 mil of cash. Not bad, but nothing's really blowing me away here, to be honest with you. I'd like to see the sales kind of grow more. They're down double digits, losing net income every quarter. Same with free. Yeah, I would just be careful with that one. Yeah, just a $900 million name. So let's see here. These are some interesting stocks here. I don't know. We kind of, well, yeah, let's look at Monster Beverage. So actually, here's a surprising fact about Monster Beverage. I wonder if anyone knew this. Do you know who the largest shareholder of Monster Beverage is? Well, it's actually Coca-Cola. So if you own any Coca-Cola stock, you technically own some Monster Beverage. They own 21% of all the shares. So pretty cool. They have a big partnership with them. And, they own the gas stations for the energy drink space. Does anyone remember Bang Energy? It was really popular on TikTok a few years ago. If anyone's an OG, Bang Energy was sponsoring every TikToker. Well, that company, they put on their can the word super creatine. Monster sued the company for $400 million. Then Bang Energy went bankrupt. Then Monster Beverage bought the company and acquired them. So pretty monster tactics here, but the business is growing. I really do like this company as well. So yeah, they're also a huge buyback play. Oh, I have to show you the share buybacks of Monster Beverage. How could I not do that? So they don't pay a dividend. The way they return money to the shareholders via dividends. So look at this. The net income is up by 14.9, but the net income per share, oh my gosh, is up by 21. So did they really buy back 6% of all the shares? Let's see. We just go to the share buybacks right here. Oh, it was right here. Oh, I remember this. So yeah, they bought $3 billion back of their own stock this quarter and then 500 mil the next quarter. So pretty crazy. Yeah, they really did buy back 8% of the shares. Okay. Someone said, Loney said PFE. So here is Pfizer stock. This company owns a lot of random prescriptions like Viagra, for example. But basically, this one's kind of a dividend play right now. They've been struggling. They're the same price as they were back in 2012. But you're basically buying them for the dividend because look at this. Oops. Uh-oh. There we go. So yeah, they have a 6.6% dividend yield, but look at the payout ratio. It says 120% payout ratio. Here's how we can do the numbers for ourselves to see, is this company's dividend safe? So in the most recent quarter, they made $2.93 billion. Let's just assume, if we average it out, yeah, they're making around $3 billion in net income a quarter. So let's say this company makes $3 billion in net income a quarter. Let's see how much the dividend cost. And the dividend costs $2.45 billion. So at the very least, Pfizer needs to make $2.45 billion in net income just to afford the dividend. And luckily, in the two most recent quarters, they have been and had a little bit of leftover money too. Pretty cool. Monster is really popular in social media. Yeah, it is. So here's an interesting one. So there's only one reason you really want to buy this stock, and it's actually pretty interesting. So check this out. This is GameStop, a pretty much meme company, but there's one thing I like about this company, and it's their cash on hand. So it's tough as a shareholder because every time the stock goes up, they dilute you and raise cash. And I'll show you that in a minute here. But look at this market cap. The whole company at GameStop is worth $10 billion. So kind of just think about this logically here. Don't think too hard, but the whole company's worth $10 billion. They have no debt at all and have $6.4 billion of cash. So literally 64% of the entire market cap is just their cash on hand because they have $6.4 billion of cash, no debt whatsoever. But, it's not a great business. I mean, look at these sales year-over-year declines. I mean, business is not great. The only reason they're good is their cash on hand. So anyway, that's my honest thoughts on them. I'm not too obsessed with them. But that's interesting. Their cash on hand. Someone said AppLovin and Broadcom. Oh yeah, remind me to look at Broadcom. I love that company. But here's a super growthy company that I think will really interest you. If you've never heard of this stock before, this is AppLovin. And if you're wondering why has the stock gone up so much, the financials explain it. They have incredible growth of the business. I wonder if there's any news here as well. Um, Sorry, my Wi-Fi is a little slow right now. Nope, there is no news. Never mind. So anyway, look at this right here, though. This is why they deserve to be at all-time highs. The sales are up 77%, and look at this number. They made 1.2 billion of revenue. 820 million of that was net income. They are growing their net margins at a ridiculous pace. I mean, I almost don't believe it. Sales are up 77, but net income's up 164. That means they're growing their net margins. Look at this. The net margins are 65%. You go spend $100 at this company, $65 of that is net income after tax profit for the company. They're an advertising company, kind of like Meta, super high margin money printer like Meta. Look at this FCF, which stands for free cash flow. It's up 60%. I mean, just look at these year-over-year growth rates. That's the reason why this stock is just a monster performer. They have monster growth. Pretty cool. So let's see. Yeah, let's look at Broadcom right here. So AVGO. So this one is kind of like you get exposure to Nvidia with a dividend, a real dividend here. And I love this company. They're extremely growthy. Check this out. You get a 0.8% dividend, and they raise their dividend every year, which is pretty cool. You know, you're not buying them for the dividend. You're really buying them for this stock price appreciation. I mean, look at how much the stock has gone up recently, but um, here's the best part about the company. A lot of people know them for their semiconductor solutions, which is up 16% year over year, pretty good. But the main growth driver of most of this stock price appreciation, where this market cap has come from, is from the growth of their infrastructure software business. This business used to be nothing, well, not nothing, but it was only, 2 billion of revenue a quarter. It always stayed at 2 billion. Then it exploded up higher, literally to a new record now, 6.6 billion. So it's done wonders for the numbers. You're like, look, the free cash flow was 6.4 billion. It grew 44%. We look at the net income, it was 5 billion this quarter. So okay. Can you explain 5.9? I'm not sure what that is, but let's check it out. FIVN. FIVN 5.9. So a $2 billion company. The stock is at an so yeah, not great. The stock is at an all-time low. Let's look at the financials and see if we can figure out what happened here. That's not great. So revenue is up by 12. So the business is growing and they're just now getting net income positive. So it looks like everything's headed in the right direction. They used to lose a bunch of net income every quarter. Now, for the past 3 quarters, they've made net income every quarter. They deleveraged the balance sheet. The assets went down with the liabilities. So you focus on this ratio. It's great. So I wonder what happened. Maybe, I don't know. Maybe it's bad guidance. So I can't really explain that one too much. So let's see. Oh, CAT. Yeah, Caterpillar. This is a great like heavy machinery company. Construction company. Look at this. The stock's at an all-time high right now. They deserve to be at an all-time high. And here's why I think they might continue to keep hitting new all-time highs. It's because of this PE ratio right here. The PE is just the net income multiple, and the PE is a 22. Like, I feel like it could really like stretch up to like a 25 or something before it really gets overvalued. It hit just basically it should maybe go up another 10-15% before it caps out. Again, not financial advice. I'm not an expert, but they have a 1.3% dividend, and look at the payout ratio. Only a 25% payout ratio. The dividend, they grow it every year. Great news. And look how diversified that they are. They're in energy and transportation, the construction industry, resource industry. A lot of like mines need their huge machines. So yeah, they make $2 billion net income a quarter. They've bought back 3% of all the shares that exist on top of the 1% dividend. So they're just so shareholder friendly. They kind of remind me of like a United Rentals, which I do own. It's one of my bigger positions. Dang, Q's just went negative. Same with the SPY. So the market just went negative. Yikes. But yeah, here's my United Rentals position, by the way. They kind of move together. United Rentals, Caterpillar have similar looking stock charts. So let's see. System for call centers. Oh, interesting. So someone said SoFi. Oh, hey, I love SoFi. You know what? I do own them. I might be biased, but let me show you what I love about SoFi. I think they're up. Yeah, look at that. They're up 2.44% in the overnight market. I regret every share I've ever sold of SoFi, but here's why SoFi deserves to be at this 52-week high level. And yo, hold on, guys. Yo, shout out to the YouTube stream, Loney or Looney, he just donated $2 through Super Chat. I really appreciate you, brother. Head over, yo, by the way, y'all don't support me. Best way to support me is just watch the stream from YouTube. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. But if you miss anything as well, you can replay it. It's on the YouTube stream. But anyway, here's SoFi Technologies. Here's why they deserve to be at this 52-week high level. They're so growthy. I mean, they're a fintech. They have their own banking charter. Look at this. 43% of the revenue comes from their financial services. And look, it literally is up 105% year over year to a new record. This is incredible growth. So financial services are at a new record, and their other half of the business, the lending side, is also at a new record, up 30% year over year. So here's why people are really starting to take them serious. I mean, they literally made $100 million in net income this quarter. They're now making net income every quarter. You know, they used to lose net income every quarter. So they're super growthy, making profits every quarter now. People are just really starting to take them serious. They were great. I do have SoFi. Yeah, Zedder. Hey, thanks again, Looney, for the $2 super chat. I really appreciate that. Yo, you got a great cost basis there, German. How about Wendy's? So Wendy's is interesting after their dividend cuts. So if we look at their dividend right here, they just cut their dividend. Actually, it hasn't loaded in yet, but basically, Wendy's has been a tough buy. So look at this. Wendy's, unfortunately, is the same price that it was in 2003. So you bought Wendy's in 2003, you're down on your position, unfortunately. But luckily, they're still the sales are down. So the fundamentals here, it's tough because the lifeblood of the company, the sales are down 2%. But the good news is they're still making 40, 50 million in net income a quarter. They do have a bit of debt, but like $4 billion of debt. It's tough to pay off when you're making 40 million a quarter and 75% of it gets eaten to a dividend already. So they have no real leftover money to like invest in the future. So I think Wendy's is a tough buy. Do you think it's worth getting to SoFi? I think it's tough buying SoFi at all-time highs. You know, honestly, I consider it at $21 to $20, not at 25. But I wouldn't be surprised if SoFi just continues to win. But any underrated stocks you're looking at? Yeah, well, one stock I've been buying the dip on. Whenever I buy a stock, you can see that this is every time I buy it. Those are those little green buys there. So I've been buying the dip on Coca-Cola Consolidated. This is one company I love. They're the Coca-Cola bottling company. Another stock I've been buying, I have a buy order in set for this company, but I've been buying this one at all-time highs as well, Amphenol Group. Pretty cool one. What app is this? Please, I'm a new follower. Yeah, hey, Cupid. Again, this is a brokerage right here where you buy stocks and stuff. If you want to get it, it's in the link tree in my bio. It's that very first link there. Or you can just type it into Google. It's just a brokerage called Moomoo, but it's an affiliate link as well, so it'd help out the channel. So someone said Nebius. What up, Justin? So that's actually a stock in the NVIDIA portfolio. So if we go to NVIDIA's portfolio right here, 3% of it is in Nebius. And again, just because NVIDIA owns a stock doesn't mean you should. You should always go do your own research on it. And when we go do our own research on Nebius right here, we see some very promising things. They are extremely growthy. I mean, look at this. The revenue went from 15 mil to 105 mil. I mean, that's the kind of growth I want to see. And it really justifies the stock price appreciation. Let's see, did that beat the analyst expectations? Yeah, beat by 4%. So anyway, they're just really growthy. And NVIDIA owns them. So a lot of people like that. Wendy's food went downhill. Wendy's is expensive as well. I went there recently and I was surprised, especially compared to McDonald's. By the way, I love McDonald's, dude. We saw Wendy's stock. They're the same. Wendy's is the same price that it was back in 2004. Well, look at McDonald's, incredible stock price appreciation. McDonald's is a completely different business than Wendy's because McDonald's stock is really a real estate royalty company. You go spend $100 at a McDonald's, $4 of that goes back to the parent company as a royalty. That's how this company has 50% gross margins. It's impossible for a restaurant. So anyway, let's keep going here. Look at dark pool data. What up, Xander? Someone said, let's keep going here. Hertz, Intel. Oh, Hertz. So this is that car rental company. If anyone's heard of Hertz before, Bill Ackman just bought a huge chunk of this company. Well, let's see. Oh yeah, Hertz Global right here. $1.8 billion company. He basically bought them for the used cars. And they also just did some Amazon partnership. I wonder if that'll show here. So yeah, check that out. It's right here. Yeah, Hertz partners with Amazon Autos for nationwide used vehicles. So anyway, Hertz is selling cars on Amazon now. Pretty crazy, but here's the thing that's tough about this company and why I would stay away in all honesty. The sales are not great. The sales are down 7%. And look at how much net income they're losing. This is the tough part. They're losing a couple hundred million net income a quarter at 1.1 billion. Is this the real Nathan? Yeah, hey, this is my second account, by the way. My main TikTok account, Nathan Robert, is banned for 3 days from streaming. So yeah, this is my only second account. But yeah, appreciate y'all. By the way, that's why best way to support me is go subscribe to my YouTube channel, watch the stream from YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type in at YouTube, Nathan Robert. I'm also streaming on there. If you miss anything, you can replay it as well. A lot of people love watching on the replay. The beginning of the streams are really fun. So anyway, can we look at ticker symbol CAKE? And we got to look at Meta too. So CAKE stock. So this is the Cheesecake Factory. I go there every year on my birthday. I try to. I love this place. Anyone have their cucumber lemonade? It's really good. And I love cheesecake. Cheesecake is like my favorite dessert. But here's the thing. I don't really expect this company to really outperform the S&P 500 in the long run. Cheesecake Factory is the same price that it was back in 2017. Restaurants are a tough business, but this company's doing pretty good right now. The growth is really nice. They're making a lot of profits. They're making it, actually, funny enough, they're making nearly the exact same amount of net income that Wendy's is currently. So Wendy's is also making 30 to 40, 50 million net income a quarter. They're also making 40, 50 million net income a quarter. And you get a 1.72% dividend yield here, a safe 33% payout ratio. So yeah, if you want exposure to Cheesecake Factory, there you go. In all honesty, I'd recommend McDonald's over that one, but they're not bad. They'll probably also do good. Someone said SoundHound AI. Yeah, let's do SoundHound AI. TJX reported. Yeah, hey, Calvin, TJX and Walmart reported. Remind me to look at Meta. I want to look at all these stocks. That's why I try to go quick with these analysis. Just for respect, I try to spend like a minute each. So if you own SoundHound AI, there's really only one thing you want to look at here, and that's the subscription business. That's 75% of the revenue. So check this out. This is what's been the huge growth driver of this company. They used to have no sales. I mean, look at that, 400,000 of revenue a quarter. Well, now it's 32 million just this quarter. And look at the growth. It's up 8x year over year. At this growth rate, what's the revenue going to be at this time next year? And it was a huge beat from what the analysts were expecting. Analysts were expecting 32. They made 42. It was a really good beat, but you still got to be careful. They are losing a bit of net income right now, but they've been able to dilute the shareholder a bit, raise a lot of cash, beef up that balance sheet. That's kind of why they've been falling a little bit recently, but you're really just watching the subscription revenue there. So, someone said DocuSign. Then we'll look at Meta. So DocuSign, this is just a really boring company. I haven't bought shares of this company in a year and a half. So I haven't touched That's the definition of just buy and hold. I literally just bought some DocuSign a long, long time ago. Haven't done anything with it in basically 2 years. And it's tough because the business isn't growing that much. Like if you look at the revenue, it's single digit, like high single digit, 7-8% year over year. This is a boring business you probably don't want to own. I don't expect it to outperform. Luckily, they're making net income every quarter. They're printing free cash flow a quarter. The net income has been starting to grow a bunch. They also are debt free, 600 million in cash. I know they've been doing some buybacks as well. But anyway, I'm not buying more don't spam here. Hold on. All right. So let's see here. What was the stock I want to look at? Meta. Let's look at Meta right here. So yeah, we'll look at Meta. Then we can look at United Healthcare. So let's see here. Buying lots of Futu. Any thoughts? Xander, that's been one of my best performing stocks. We'll look at Futu as well. So here's Meta Platforms. If anyone's heard of Meta before, they own Instagram, Facebook, WhatsApp. They acquired WhatsApp, and the original founder slogan was no ads, no games, no gimmicks ever. And now they're introducing ads to WhatsApp. But anyway, look at this right here. This is crazy. Meta has 3.5 billion daily active users. I mean, pretty much half the world is on a Meta app a day. They print money. Look at this. It's a $1 trillion company they're a $2 trillion company with 40% net margins, making 20 billion in net income a quarter. I mean, look at this. The sales are up by 21, but net income's up by 36. They have pricing power. They're growing their net margins. They just took a 3.5% stake into Ray-Bans. The Threads app is nearing the same amount of daily active users as X. They signed a $10 billion cloud deal with Google. They partnered with Midjourney recently. Meta to launch $800 AI smart glasses with Esor Luxtra. I don't know how to pronounce the company, but that's the company right here that owns Ray-Bans that Meta just bought a 3.5% stake in. So anyway, Meta's a great just buy and never sell stock. They also acquired Scale AI. That's going to add a couple $100 million of revenue every quarter for the rest of the time. I love Meta, man. I might be biased though. Full disclosure, I do own shares of them, but I own them for a reason, just because I love the business. So let's see. Let's look at Futu right here. So this is a company I do own, by the way. Check that out. I am up. I got only 8 shares, but we're up a good chunk on this company. This stock right here, if you're wondering, what is Futu stock? Well, you see this app that I'm on right now, this little brokerage. It's that app publicly traded. So this literal app that I'm on right now it's them publicly traded. So here's their stock right here. So it's good to know that this stock's doing good. They're printing net income. This is the crazy part. Revenue's up 68, net income's up 111. They literally have a 50% net margin. Here's the number of people using the app. They have 27 million users. Anyway, they make their money from brokerage commissions and then interest income. Check it out. The revenue's up for the interest income 43% year over year. And they're making a little bit of money on here. So look at this. I keep my cash in here as well. So I have $900 of cash. You get paid the daily interest, and then they also make a little bit of interest on you. Anyway, pretty cool little stock there. They're kind of like Robinhood. Robinhood is another one that I own. Check this out. Robinhood, Futu, they're both similar. Yeah, Robinhood as well. This is my best performing stock of all time, up 700%. I regret every share I've ever sold, but anywho, let's see here. Hey, what up, Pika? Good to see you, man. Sorry, but what do you think of Hood and ASTS Space Mobile? You know what? Since we're on that company, let's go ahead and look at Robinhood. So, that's this stock right here. I bought this company, dude, when they IPO'd. Man, I'm old. Look at this. That's where I bought Robinhood shares. All I did was hold it for a few years and we're finally green. But anyway, here's why Robinhood deserves to be where they're at today. They're so innovative, so growthy. Check this out right here. The revenue's up 50% year over year after growing 40%. But look at this total revenue, $990 million of revenue. And out of that, $390 million of it was net income. They have ridiculous margins, just like Futu. 40% net margin on this company. They have 26.5 million net cumulative funded accounts. It grew by 1 million in just one quarter. Anyway, Robinhood's great. And hey, I've probably given them a lot of transaction fees and stuff too, because I used their app. But anyway, yeah, I have my Roth IRA in Robinhood as well. But this is my favorite one right here. So let's keep going here. Futu might go higher. Yeah, the forward PE. So look at this stock right here. Here's that. You're right about that. That's the interesting part. So here's this stock right here. They're at an all-time high today. Now, this will probably be hard to see, but if you look at the left, it says PE forward. They're trading at 21 times forward net income. That's really cheap. I feel like that could go up to a 25. That'll send that easily up another 30%. Let's see. Hey, what up? Let's see. Do you like Moomoo? I like Futu better probably at this valuation, but both are great. What's your favorite tech growth ETF? Yeah, my favorite growth tech ETF is QQQM. That's the exact same thing as the QQQ, but with a lower expense ratio. It's the exact same thing as QQQ, exact same NASDAQ 100 strategy with the same holdings, same weightings, but just with the lower expense ratio. So QQQM is my favorite ETF. So, all right, what up? I saw this one earlier. I forgot to get to it. This is the Trade Desk right here. This is that TV advertising company. I wonder if there's any news for this one. Nope. So they've been hit with a few waves of bad news. So first off, they lost Netflix as a partner. Netflix used to use the Trade Desk. Now they don't anymore. They've seen a lot of increased competition from Amazon and Roku's partnership. And they just gave bad guidance. So the reason the stock fell so much was because they guided for or not low single digit, but for single digit growth. And investors don't want to hear single digit growth. That's pretty low against the expectations. But look at this, because look at the actual numbers. They beat on revenue, they beat on net income, and they beat on EBIT. So then why did the stock fall? It was the guidance. So also the margins fell a bit. So here's what I mean by that. The revenue grew by 19. Revenue's up by 19, but profits are only up by 6. So the net margin fell by 10%. But anyway, I think this one's worth looking into. I for sure would put this one on the watch list, but I have a scary feeling it's going to drop to maybe $40. So, or around that level. So I would be very slow to allocate to that one. But yeah, Calvin said Disney saw unusual options activity. ASTS, yeah, ASTS is has no revenue. I'd be careful with that one. I like Rocket Lab more, even though they do lose a lot of money. So someone said Disney has a lot of unusual options activity. I don't really look at that stuff too much. I love looking at the fundamentals here. I do own Disney. I am up 40% on them. Yeah, dude, we got lucky. We bought this one during the right after this huge little April dip. I took a little bit of profit. Yeah, there's little sell orders that you can kind of see, sold one up there and another up there. But Disney, I don't really expect this one to outperform the market in the long run. Disney is the exact same price that it was back in 2015. Yikes. So anyway, I like them for the streaming service business right here. I wonder if there's any news right here. ESPN negotiates 1.6. Oh, I just read about this. Yeah, so ESPN just bought the MLB rights for 1.6 billion. They launched a new ESPN streaming service with dual tier with Fox. Disney just bought Fox, so if anyone's heard of Family Guy, that's now owned by Disney. Marvel Studios. Yeah, dude, hey, they've been having a lot of royalties. If anyone's heard of the game Marvel Rivals, those are all Marvel characters. Disney gets royalties from that. That's owned by NetEase, ticker symbol NTES. But anyway, the growth of Disney has been pretty good recently. They're starting to make a lot of net income and free cash flow. This cash from operation growth has really been the driver of the stock performance recently. That even blew away my expectations. They're now finally really profitable with their streaming services. They also just bought Fubo TV, if anyone's heard of them. So yeah. Hey, what up, Broken Toys? We back. What's up, man? Yeah, hey, appreciate y'all here. So buy SPY, silver, Bitcoin. Yeah, hey, those, I do like those. I like gold more than silver, but someone said it Ford and Sale stock. Let's look at SAIL. What is this one? I haven't heard of this company. Oh yeah, we can look at Rivian MB. Wait, SAIL. Hopefully we can find that stock right here. Crypto on Monday up or down? Well, it just fell, so it might be down. I don't know. Here's SailPoint. They just IPO'd in February, so there's not too much history behind this company, but they're an $11 billion company. That's a big market cap. So they're an $11 billion company. They do software as a service, term subscription, maintenance. Hey, that's interesting. Let's see. Again, they just IPO'd, so there's not too much revenue data here, but revenue's up 22. They lost net income on it. That's all right. Maybe it was an IPO fee. See, just when they IPO like this, they have these lockups and they're able to pay off the debt because the IPO stuff. We need a few more quarters before I can really give you real thoughts on this company. But here's where the revenue comes from. Hopefully this is helpful, software as a service. And but anyway, it just IPO'd. What percent is SoFi in your portfolio? After I 2% or less. I only got 24 shares of them, but I regret every share I've ever sold of them. What I kind of do is with Robinhood as well. I doubled, tripled my money on the stock, so I sold most of it, kept a few shares, and I regret all the shares I sold in the past. But we still got 24 shares of SoFi left. How are they doing in the overnight market right now? We do have some. And by the way, we do got some losers in here as well. UiPath, Zoom. Dude, Zoom was up 12. Dude, we're down 45% on Zoom, even after their really green day on Friday there. So anyway, let's see. Let's look at Rivian right here. So the largest shareholder of Rivian is actually Amazon. So I do own Amazon stock. So let's see. Is there any news here? Rivian announces $5 billion Georgia factory with $1.5 billion in government incentives. Pretty cool. Unfortunately, this company, the reason the stock is not doing too well is because they're losing a bunch of net income every quarter. So check this out. Yeah, like they lost a billion this quarter, 500 mil last quarter, 800 mil the quarter before. So they're just burning through a lot of net income, and it's tough. But look at this largest shareholder. Amazon owns 13%, and then Porsche owns 12%. So pretty cool. But I don't know if I'd buy that one individually. I just own Amazon. So is this a new streaming account? Yeah. Hey, Jace. Yeah. What up, dude? Good to see you. Yeah, dude. My main account, Nathan Robert, is banned from streaming for 3 days. So yeah. By the way, best way to support me. By the way, I sell nothing. I have no course book, Discord, WhatsApp, Telegram. I sell nothing. The only thing I do have is a YouTube channel. So best way to support me, subscribe to my YouTube channel. It's called Nathan Robert. TikTok keeps taking down my streams for like random reasons. So anyway, YouTube channel is called Nathan Robert. You can just type that into YouTube. It's also in the link tree in my bio. So anyway, let's keep going here. Someone said do Ford. Unfortunately, this one is not done too well. So if we look at Ford stock, they are the same price as they were back in the year 2000. So kind of imagine that you buy the stock in the year 2000 and it's 30% lower. But the main reason you're buying Ford is for the dividend right here, because check this out. You get a 6.4% dividend and the payout ratio is only at 50%. So they do for right now have a safe dividend. But again, you have that dividend comes at the sacrifice of the stock price appreciation. That's why Ford is, flat since before the year 2000. So it's just a dividend play at that point. Okay. Disney in the process of that's not good. So PODD. Oh yeah, hey, this is someone recently told me about this stock. So this is a like they're the only like pod of insulin or something. I don't know. Someone said it was a really unique business that was cool. So yeah, they basically they're a healthcare company. Let's see the growth of the sales. So yeah, look at that. The sales are up 32% year over year. And look at these operating profits. I mean, this is the best part. This is up 122% year over year. So I'm actually considering adding this stock into my Roth IRA. They're deleveraging the balance sheet. Went from liabilities were 65 to now only 57. So this company is actually really impressive. No dividend yet. That's all right. Let's see. Are they doing any share buybacks? Let's see. No share buybacks, but that's okay. How much do you make off YouTube? Barely anything. Less than $100 a month. I wonder if I can show that, but I don't want to. All right. Let's see. Hey, thanks for following the YouTube. So let's see. DOC. Sorry. What up, Tony? It's all good. Should have bought Ford in 1910. Yo, I was alive back then. So this is Health Peak Properties, ticker symbol DOC. This is actually a REIT, a real estate investment trust. So this is going to have a really high dividend yield, and that's because they have to pay out most of their taxable income in the form of a dividend by law. So they have a 6.7% dividend, but again, that comes at the sacrifice of the stock price. So this is another company. Look, if you bought this stock in 1997, you are down by 50% on your shares. So it's tough. It's tough. So I don't really expect I want to really outperform the market in the long run, to be honest with you. So someone said, oh, MSTR, yo, MicroStrategy. Yeah. And by the way, if y'all wanted the follow button, we go live every Sunday. Usually twice on Sunday. So here's MicroStrategy. This is basically just a Bitcoin proxy. They just dilute you as a shareholder and just buy Bitcoin with all that cash. And here's where you can really see that. If you look at the balance sheet right here, the assets a year ago were 7 billion. Now it's 64 billion. That's mainly from them diluting you, raising cash, buying Bitcoin. And that seemed to be the right move because a lot of the Bitcoin they bought, they're up a big chunk on. So I wonder if there's any news about if they bought any more. Strategy acquires 4 to 30 Bitcoin. Anyway, yeah, it's like a Bitcoin proxy. Sometimes, like if Bitcoin goes up 1%, they'll go up like 1.5%. You think if Fed cuts rates next month, S&P will be highly green? Well, hey, right now, I think that's really what technically. If the SPY does go green, it wouldn't be too much green because the market really priced that in on Friday. That's why the market was so green on Friday. So basically, Jerome Powell confirmed. This is why the market's been doing so good lately, or just on Friday. Jerome Powell confirmed rate cuts next month, pretty much. And there's now a 90% chance of a rate cut in September. So in 30 days from now, 90% chance rates will be lower. Pretty cool. And the market's excited about that. So Tiger said, can we do NNE? Oh, here's nanonuclear technology. So this is a nuclear startup. I wonder if there's any news here. No. So yeah, or let's see. What's the market cap? So only a $1.3 billion company. If I wanted exposure to nuclear, I wouldn't buy this company. So yeah, if we go to revenue right here, it says no data because they're a startup. They've never sold anything, not a product or a service, and they're losing a bit of net income right now. But if I wanted exposure to nuclear reactors and just nuclear energy, I would highly, highly recommend checking out ticker symbol CEG. If like you really just want exposure to nuclear, that's the reason you're buying the stock. Check out CEG. They own literally 50% of all the U.S. nuclear reactors. They're my favorite utility out there. DNUT, yeah, hey, this is kind of a meme at this point. Donut stock, uh, huge losses, high chance of bankruptcy. So, yeah, has anyone heard of Krispy Kreme, the donuts? They're only a $600 million company. Just for comparison, McDonald's is worth 220 billion. Mm. And so Krispy Kreme's only worth $600 million now. Here's the scary part. They lost 400 million in net income this quarter. Not sure how that's possible for a donut place, but the quarter before they lost 33 million, the quarter before 22 million. So these huge net income losses is really hurting the company. They're leveraged. Dang, that huge net income loss came right off their assets, and now that leverage up the balance sheet. Liabilities are 72% of the assets now. It's tough, man. So I wouldn't buy that one at all-time lows probably. So let's see. Oh, Costco. Yeah, I agree. My one complaint with Costco is that the company is trading expensively, but they're the most well-run grocery store out there. You have to have a subscription to even get into a Costco, and whether you go to Costco or not, they still make that high-margin subscription revenue. And customers love going there because when you go there, you buy stuff in bulk and you get a good deal. You also like buy the gas there. They have some loss leaders like the $1.50 hot dog, the rotisserie chicken. They lose a little bit of money on that, but it brings the customers in and they buy a bunch of other stuff. And anyway, look at this net income. I mean, 2 billion net income a quarter. Um, you get a 0.5% yield, but yeah, this PE ratio right here, trading at 55 times net income is tough. So that's why if you're looking for like a cheaper Costco, and it's somewhat different. And this is a stock I talked about at the very beginning of the stream. If you want to replay it, it's like the first or second stock I went over. Is actually Sprouts Farmers Market. They only have $8 million of debt, so they have no debt, 300 million of cash. Bought back like 3% of all the shares that exist. Sprouts Farmers Market's a very fascinating company with huge margin expansion. So, Mr. Millie said, "What do you think of my portfolio? SoFi, UNH, Google, UPS. Yo, I don't like UPS, but those are great. You know what? Docs versus DocuSign. Yo, to be honest with you, both are kind of boring and not great. Let's see, how is Docs doing? I think this stock is owned by Warren Buffett or Nancy Pelosi. Um, here's Doximity. Let's see here. So let's see what they do. I think they're just a subscription model company like DocuSign. So revenue's up by 15. That's better growth than DocuSign, actually. So revenue's up by 15. They're making 50 mil plus a net income a quarter. Really good free cash flow, really good net income, really good balance sheet as well, debt free, just like DocuSign with 800 million of cash. So actually, that one's a kind of like more. I say that as I do own DocuSign right now. I got 10 shares in them. Like, look at DocuSign, and it's been, they were huge during 2020 when everything was going digital. So cash in on the 14% profit on Krispy Kreme them. Yeah, hey, maybe there, James. To be honest with you, the long-term like trust I have for Krispy Kreme isn't great with those huge losses. So yeah, James, I would if I don't know if I'd if your plan was to hold them forever, I'd maybe reconsider and trust it with a different company. Not financial advice, of course, I'm not an expert. So is it worth it if it pays dividends? Potentially. I forgot what we were talking about there. Jeremy said IXHL is a big share buyback company. IXHL. Let's see. Inconex Healthcare. So yeah, we don't really like to cover these kind of stocks in here. Are you sure you're talking about this one? Big share buyback last. Okay, well, this is a 55. Oh, you're right. So I kind of read the top little message here. Board authorizes to repurchase 20 million shares. That's pretty meaningful when the whole market cap is 55 million. So they're basically saying they're going to buy back 30% of all the shares. Can they afford that though? So here's the thing. Where is that $20 million coming from? Because they're a revenue-less company. They did 12,000 of revenue. They're losing 4 or 5 million in net income a quarter. So I don't know where they got that money from to buy back those shares, but it's interesting. I'd almost rather them not do that buyback in like and like invest in a company or reinvest in a business. So I wanted to go over UPS real quick. You're paying a premium to own it. SCHD versus QQQM. Oh yeah, yeah. They're they're kind of similar. I don't know if the other one's a Nasdaq 100 strategy, but here's UPS. Here's the tough part about UPS right here. They're like that shipping business. Look at the yield. I mean, this is a really high yield, a 7.4% yield. Here's how we can tell if this is sustainable. Here's how we can see if it's a dividend trap. So in the most recent quarter, they made 1.28 billion in net income. Let's just round it up to 1.3. So they made 1.3 billion in net income. Well, just the dividend cost 1.35 billion in net income. So they couldn't afford the dividend this or last quarter. They at least need to make 1.35 billion in net income a quarter. They're also just not in a good position because even if they make 1.35 billion, all that money is eaten up by the dividend. So they have no leftover cash to do anything with. They can't reinvest in the business, do share buybacks, have any innovation really without diluting you or raising debt. So it's tough. And that's why I think this stock is dang the same price that it was back in 2014. They're honestly, they need a healthy dividend cut. I don't think investors mind if it goes to like a 4% yield, like a kind of like a FedEx is. So let's see here. Hey, what up, Kevin? Costco has special dividends. Yeah, they did do that special dividends one time. So oh yeah, Oscar Health. Let's do Oscar Health. So this one has been kind of caught up with the Medicare, Medicaid shenanigans with UNH. That's why they gapped down on this day right here. But here's why I almost like Oscar Health, kind of like United Healthcare. So check this out. It's just the growth of the sales is the best part here. I mean, literally, if we look at this on an annual basis, in 2020, it was only 590 million of revenue. Now for the full year 2024, it was 9.2 billion. I mean, that's an incredible growth, but they're still struggling with net income positivity. Like they made 200 mil, but then lost 200 mil. So we just want to see them consistently start to make more net income. But there is also that regular the regulation headwind. So yeah. Um Andre said WLDN. What is this one? Wilden Group. Oh, hey, this is that mid cap. I've heard of this one. So yeah, this is a $1.6 billion company. So there could potentially be even more upside. Yeah, look at this huge revenue beat. So they beat on revenue, huge beat on net income. Wow, that explains this crazy gap up of the stock price. Analysts were expecting 49 cents of net income or of EPS, and they made $1. So basically, EPS is just net income. They beat on net income by double. Yeah, look at that, making net income every quarter. Sales are up 23. So hey, they're an energy business and engineering and consulting. Interesting. How's that doing? That's up 15%. Energy's up 25. Nice. Both businesses are growing. I see why that one's doing so good. I don't know if I'd buy them at all-time highs, but they're only a $1.6 billion company. They could potentially keep on going up more. So yeah, congrats if you own that one. So let's see here. SLB stock. What up, Calvin? So SLB. Oh, this is Schlumberger. I used to call it Slumburger, but yeah, this is Schlumberger. This is an oil and gas company, and these oil and gas companies really don't outperform the market in the long run. Like Schlumberger is the same price as they were back in 2004, so it's tough. But you're basically buying them for exposure to oil and the nice yield. You get a 3% plus dividend, only a 33% payout ratio. Reservoir performance, well construction, production systems. Anyway, yeah, look at this net income. They're pretty much making over $1 billion of net income every quarter. But yeah, look at this. The sales, they lost the growth. A lot of oil stocks are seeing a similar decline in sales. This summer we had oddly low oil prices, but the sales are down 6.5%. They're still making over $1 billion net income a quarter. I'd probably, honestly, I'd rather just buy the safer Exxon or Chevron. If you had to pick one stock to hold for the next 5-7 years, I'm thinking Google. Yeah, hey, I'd pick probably a Mag 7, like a Google, Microsoft, or even a McDonald's, man. But hey, if you're wondering what kind of stocks would I buy and hold forever for the long run, it's kind of this portfolio right here. I've dedicated this account right here. I have multiple other accounts right here, like this is my kind of risk on portfolio. And then I also have my dividend growth portfolio right here where every stock in here pays a dividend. But this one right here, if you look in the top left, is called my buy and hold portfolio. Basically, once I buy a stock in here, I'm really trying to never sell it. just hold it on for the long run. I've never sold a single share of any one of these stocks. I've not taken a single profit on any of these stocks that you see here. So even this one, like, look, we've been dollar cost averaging into this one. This one I wouldn't really buy. But anyway, let's keep going here. SLB saw unusual options activity. Oh, hey, since Pfizer had Starboard bought shares, so I'm getting dang, Michael, what's up, dude? Yeah, you're getting a nice little dividend from Pfizer. We were just talking about this company. So check this out. Here's what you really want to focus, and here's why I think the dividend is safe, because check this out. For the past 2 quarters, we'll just slightly round up. They made $3 billion. Yeah, if we kind of average it out here, they're making roughly $3 billion of net income a quarter, or at least they have for the past 2 quarters. So they made $3 billion the past 2 quarters, and the dividend cost 2.45. So they have like 500 million plus of extra cash after doing the dividend the past 2 quarters. So this crazy 6.6% dividend yield is safe for now. We want to see them. Let's see, are they continuing to do that? So yeah, they're expected to continue to make this sort of net income for the next 2 quarters. Great. So analysts are expecting them to easily be able to afford the dividend. They probably have like a 60 to 70% payout ratio for a 7% yield. Microsoft best long term. What was $8.99? I don't know what was $8.99. I forgot what I was looking at there. But someone said Microsoft best long term hold. Yeah, I agree. That Microsoft is a great just buy and hold forever stock. And I actually just bought 1 share of them on Friday. I am slightly down on them. So, what other Microsoft shareholder is down on their shares with a stock price like this? But yeah, I just bought 1 share, just kind of just never sell. I mean, I don't care if I'm down now. I know in 10 years from now I'll be good. But yeah, I bought 1 share of Microsoft. I'm down 0.2% on them. I'll be quick about this. Here's why I really like Microsoft. I mean, they have a better credit rating than the U.S. government. So Microsoft is a safer investment than treasury bills, which is backed by the U.S. government. But look at this net income right here. I mean, they're printing money. I mean, $28 billion this quarter, $25 billion last quarter. I mean, this growth is crazy. They're very diversified. They have the productivity and business side, the intelligent cloud business. The Azure cloud has been growing like crazy. It's up 25% from the previous year to a new record. Personal computing. Yeah, but their Microsoft Office products, they just rose the price of that by 25%. So anyway, I'm very curious to see what happens with Microsoft. Microsoft expands NFL partnership with AI integration. Yeah, Microsoft owns like 49% of OpenAI. Anyway, pretty cool. JP Morgan. Yeah, hey, how about Dutch Bros? Ooh, which one should we do? Wait, it was a stock. Oh, I think we would think that might have been Perion Network. Oh, or $9. I don't know what stock. Hey, by the way, you can scroll back on the stream. Yeah, that's what I love. By the way, best way to support me is to subscribe to my YouTube channel. For everyone on the YouTube TikTok stream, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio, very first link there. Or no, not very first link, but YouTube channel is called Nathan Robert. You can just type that in YouTube. So here's Dutch Bros, BROS. So yeah, this is kind of like a Starbucks competitor right here. So if you've heard of Dutch Bros before, they're only like on the West Coast. I've been to there once when I was in Arizona. But yeah, look at this. Their company operated shops is up 29% year over year. So, for a restaurant in this environment, that's pretty good growth. Sales are up 29%. Then they have the franchise revenue, which is higher margin. But look at this. They're making net income every quarter, record net income quarter, up 73% from the previous year. So I love the growth that Dutch Bros is currently experiencing. So yeah. Blue Moon. Hey, Blue Moon. I'm on a brokerage right here where you buy stocks and stuff. Again, if you want to get this little app I'm on, it's in the link tree in my bio, very first link there. Or you can just go to Google and type in Moomoo. It's just a brokerage, but it's an affiliate link too. So if you sign up for the link tree in my bio first link, we'll both get a little bit of free stocks. Full disclosure, it is an affiliate link. Here's JP Morgan though. This is a bank that's too big to fail. Perfect, like buy and hold for the long run. Even though the stock is at an all-time high, you still get this very nice yield, a 1.8% dividend yield, only a 25% payout ratio. They're making so much net income, it's ridiculous. I mean, literally 14 billion in net income every quarter. I mean, crazy numbers there. So let's look at this one right here. ANET. This is Arista Networks. This one's on my watch list. I'd love to own this one at a lower valuation. But yeah, they're pretty much at an all-time high, and they deserve to be at an all-time high as well because check this out, they sell products and services, and the product revenue is at a new record, up 31%. I mean, it literally just hits a new record every quarter, every year. So the product revenue is at a record. The service revenue is also up 22% year over year. And look at this net income they're making. This is the after-tax net income. It's 888.8 million, up 33% year over year. So pretty good growth on that one. So yeah. Um. Oh hey, yeah, it's actually AENT. Oh well, luckily someone else said Arista Networks. So let's see. AENT. So what is this one? AENT Alliance Entertainment Holding. So okay, yeah, very very small company. This company is only worth $250 million. But let's go look at their financials right here. So the whole company's worth 250 mil. They have a lot of revenue though. Wow, the price to sales is like a point 0.4. If I had to guess, yeah, or point 0.2. So yeah, they're trading at point 0.2 times sales, and they are, I guess if you really average it out here, they are technically they're making net income every quarter. So that's really interesting, you know? Out of all the $260 million companies, I'm really liking this one because they're making net income every quarter. But I still be careful because they seem really tiny and the sales weren't growing, but interesting. Airbus. What's the ticker symbol for Airbus? You know, I don't love the airline industry, to be honest with you. So why DocuSign when Adobe? Yeah, hey, you know that I don't love DocuSign right now, but let's see, Intuit. So yeah, this is the company that owns TurboTax. It's kind of like they help you with your taxes if you've heard of them before. Um, and they just reported earnings, and the stock fell 5% on the day. I think it was because of the guidance, because they beat pretty good on the earnings. They beat on revenue, they beat on net income, and they beat on EBIT, but the stock fell nonetheless. Hey, what up, Tangriga? Yeah, hey, I'm streaming on my second account. My main account, Nathan Robert, is banned for 3 days from streaming. So that's why I appreciate y'all being here. Best way to support me is also just subscribe to the YouTube channel. I'm streaming on there as well. YouTube gives me no problems, but TikTok gives me a lot. So anyway, Intuit, I really like this company. They make the bulk of the revenue every Q3 of the year, tax time. So yeah, it was up 18% year. I like Intuit. I'm going to put them on my watch list because I'd like to get exposure to them, get a nice 0.6% dividend yield. So yeah. BMNR. Yeah, we just looked at this one not too long ago. So basically, this is just an Ethereum. Yeah, what up, Catherine? Yeah, this is an Ethereum proxy. Basically, they just own a bunch of Ethereum. Whenever Ethereum goes up, this goes up a little more. Yeah, revenue from self-mining, revenue from sale of mining and stuff. But anyway, yeah, you basically just look at the net asset value. I wish I could talk more about that stock, but it's just a Ethereum proxy, and Ethereum goes up 1%. Sometimes they go up like 2%. So they're kind of like the Ethereum version of MicroStrategy. What is this one? What up, George? Or someone said CAG. Let's look at CAG. Let's see. Hey, what up, Bubs? Bubholes? How's it? Oh, probably shouldn't have said that. What up, though? So here's Kongara Brands. So this stock is the same price that it was in the year 2000. So this one has not done well. What do they do? So grocery and snacks, refrigerated and frozen. So and they're in the food service industry, which is a bit tough. Yeah, like look at this. This is not great. The lifeblood of the company. The sales are declining. It's down 4% year over year. Luckily, they're still making net income every quarter, so that's great. But that probably explains why the stock isn't doing too good, and it looks like the revenue is expected to kind of fall more. Yikes, yeah. So yeah, they're kind of just, they lost all their growth. So if I want exposure to grocery, but they're still making net income every quarter. It's not the end of the world. I need to relook at them and do some kind of multiple on them. But someone said SEED microcap. Origin Agritech. So yeah, we don't really cover these kind of stocks on here. That's crazy. So look in the top right. The whole company is worth $7.9 million. And they're Chinese. So it's a Chinese company, only worth $7 million with no sales. I would not buy that one. But yeah. All right, someone said FCX. Ooh, Nvidia earnings report on Wednesday. Thoughts? Yeah, we'll look at Nvidia as well after this. Let's do it. So this is I haven't heard of this company, Freeport McMoran. Something. Okay, well, they're the same price as they were back in 2007. What do they do? So Indonesia operations, rod and refining. Oh, so it must be some sort of commodity. Atlantic copper, smelting and refining. So they're in the copper industry. They're in oil. Uh, they own some mines. So very diversified company. And look at that. Basically, we really just want to look at the net income and look at that. They're making a lot of money every quarter, nearly $1 billion in net income a quarter if you average it out there. So not too bad, 1.4% yield. But again, I don't know if this one will really outperform the market in the long run, but it's done really good the past 5 years. Duolingo short. Hey, I like Duolingo. Let's check out Duolingo. Oh, and then we got to look at Nvidia. Oh, I forgot. We'll look at Nvidia after this. Um, so here's Duolingo right here. This is that boring language learning app, but this is a great company. Like very surprising. Like I think this will impress you as well. Like check this out. 84% of the revenue comes from their subscription business. It literally just hits a new record every year, every quarter. These year-over-year growth rates in the middle are ridiculous. It grows 50% every year. Also, the advertising revenue is up 55% year over year. So the business fundamentals on every metric is at a new record, and they beat the expectations too. So the expectations are at a record. The only reason the stock has fallen because of some sort of increased competition from OpenAI. Like there's not like a new competitor. Um, what? Duolingo? Oh, okay, never mind. Duolingo expands into chess and music education through Next Beat acquisition. Anyway, I thought I was going to talk about the OpenAI news, but yeah, OpenAI made some like increased competition or some sort of similar app. I don't really know, something like that. But I think Duolingo, it's worth looking into. Show us your stocks. Yeah, hey, by the way, I've been doing that. If you want to see every stock that I own, go to my YouTube channel. I do stock portfolio updates all the time. And if you just replay the stream, at the very beginning of every stream, I go over every stock that I own and how they're doing on the day. Let's see how the Qs are doing right now real quick. Yeah, markets are still down right now. Dang, QQQ is down 0.1 now. Yikes. That's no big deal though. So, all right. Yeah, Gorilla Technologies. This one, I don't really see any value in this company. It's just all meme and momentum right now. So it's a $400 million company. Security Convergence. Well, hey, they do have sales. Actually, let me see. Is that real? That is good, actually, the sales. Let's see. So they, wait. Yeah, sales are up 76% year over year, but they didn't report. Anyway, actually, this isn't too bad, actually. It's not as bad as I thought. I was probably thinking of a different company. They're headed in the right direction. They're barely losing any money, so not that bad. Anyway, yeah, I like the growth here. I guess this is exposure to security convergence. Yeah, kind of look at those annual sales there. Actually, Gorilla Technology is not too bad, actually. Yeah, hey, nice. Okay, Kava. Hey, yeah, this is a kind of Chipotle competitor. I forgot to look at Nvidia. Gotta look at Nvidia. Can you check the future prices for cocoa beans? I don't know how to do that, Diamond, but I know cocoa prices have been really high, and it's really hurting Hershey's right now. But yeah, here's Kava Group. It's like a Chipotle competitor. Let's see how they're doing. So revenue is up by 20. Net income's down by 10. That was actually a one-time adjustment. Okay. So this company actually isn't doing too bad, but it looks like, according to the analysts, they missed on revenue, beat on net income, and beat on EBIT. So they just missed on the revenue, which isn't too bad. I think this one also is just falling because of how much Chipotle's been struggling recently. Oh my gosh, is this for alt account? Yeah, hey John, what's up, dude? Yeah, hey John, by the way, I'll be TikTok banned my main account for 3 days from streaming. So hey, that's why, John, best way to support me, for everyone watching this, head over to my YouTube stream. I'm streaming on there too. YouTube channel is called Nathan Robert. You can just type it in. It's also in the link tree in my bio. Yo, hey, what up, John? So yeah, Dell stock. What up, Connor, as well? Let's look at Dell. So yeah, this is a company. They've been having a lot of shout outs from Nvidia because Dell got into the server rack installation business, which is basically they do exactly what Supermicro Computer does. So when I was watching the Nvidia Blackwell presentation, they basically gave a shout out to Dell and Supermicro Computer to install it for you. So that's pretty cool. Yeah, that's their infrastructure solutions group right here. That business is up 12% year over year. Not bad. This is kind of just a value play, though. I mean, they're trading at 20 times net income. Very low, but the industry average is a 19. So that's actually pretty fair. But yeah, look at this right here. They're making if you average it out here, they're making over $1 billion in net income a quarter, get a nice 1.4% dividend, safe payout ratio. So yeah, it's kind of like a value play. Not too bad. Hey, thanks, John. I appreciate you. So someone said, how should we? So I'll be quick about this one. This is a dividend trap, and if you own this stock, I feel bad if you do, because check this out. If you look at the dividend, the yield is a 22%. That is a crazy high yield, and the stock's at an all-time low, unfortunately. So yeah, you get the nice yield, but so. As you know, whenever a stock goes down, the yield goes up. And whenever a stock goes up, the yield goes down. And yeah, so they couldn't even afford the dividend. They lost 140 million net income, lost money last quarter, then lost another 140 million. Probably was sustainable back here, but it's just tough right now. It's tough to trust that dividend. They might have to cut it potentially. So yeah. By the way, yeah, if you want the follow button, subscribe button on YouTube, we do the stream every single Sunday. So I'd really appreciate that. Oh yeah, so let's look at UPS is oh no, we have to look at Nvidia. No, I need to stop because I keep forgetting. So here's Nvidia right here. They report earnings on the 27th. So that's in 3 days. Yeah, so on Wednesday we get Nvidia earnings, and we can see what the analysts are expecting. Expecting a record revenue and EBIT. So this, as we know, they have a huge GPU market share. Nvidia has a 20% PC GPU market share. They have a lot of automotive revenue. You know, Lucid autonomous driving cars use Nvidia software. But most of the revenue right now and the growth from Nvidia has been from the data center business, because data centers need GPUs, and you know, Nvidia makes their own GPUs, and they've been able to print net income. I mean, they're pretty much making near 20 bill of net income a quarter. Fortress balance sheet, free cash flow, also incredible. And look, there's Jensen Huang. He owns 3.5% of Nvidia. So he owns 3.5% of $4.34 trillion. That's why he's one of the richest people on earth. So yeah, and also, you know, the Nvidia, the automotive revenue is like 500 mil a quarter. It's very insignificant. And also, Nvidia is so big, they own some individual stocks. Like Nvidia owns CoreWeave, they own some ARM, APLD, Nebius. So yeah, anyway, Nvidia I think is a great just buy and never sell stock. I wonder if there's any like specific news here we can see. Oh yeah, so there's an earnings tailwind for the H20 chips. They can ship back to China now. Anyway, that's interesting. In 3 days, they report earnings. So what ICHR, what is this one? iCore Holdings. So hey, this one's on my watch list right here. The stock isn't doing too good, but I think I saw some value in this company right here. So let's see. The revenue it's nice. It's up 19% year over year. So revenue's up 19. Ooh, sorry. So revenue's up 19. They're losing a bit of net income every quarter. Oh, wait. Let's go to the shareholders, though. No. So I wonder why I put this stock on my watch list, and I don't remember. There must have been something I liked about the stock, but I don't remember. I wish I'd give you more thoughts on that one. So someone said, yo, Nate, do you think McDonald's is a good choice? Yeah. Hey, I absolutely think McDonald's is a great stock to just buy and never sell. You know, McDonald's is really a real estate royalty company. You go spend $100 at any McDonald's, $4 of it goes back to this company as a royalty. That's why their margins are so high. They're not a typical restaurant, way higher margins. And for McDonald's, they own the land under 80% of the store. So they have a huge $50 billion real estate portfolio, plus the royalty streams. They're recession resilient. You know, in 2008, McDonald's is actually the best performing stock. I mean, look at this. If we zoom out, here's the year 2008. The stock didn't even dip. If you look at any other stock, like during 2008, it dipped like crazy. So McDonald's is recession resilient. Whenever you go into a recession, McDonald's actually acquires a bunch of land for cheap. And historically in a recession, McDonald's sales go up. People stop going to Chick-fil-A in Texas Roadhouse. They'll feed their family on McDonald's, So anyway, I think they're a great business model. They're very surprising. They're not what people typically think. So let's look at TSSI right here. Can you check stock dilution? So yeah, here's TSSI right here. This is a company I do own. This is an extremely small company, and you have to be super, super careful with this. I own them in my Roth IRA, but I literally have $90 of this stock right here. But here's what I liked about them. I like them for this market cap. So if you look at the top right, and I normally don't talk about these kind of companies, the whole market cap is only 418 million. So think about that. This whole entire company is only worth 400 million. That's nothing. But out of all the $400 million companies out there, this one's impressive because look at that. They're making a couple million every quarter, which is really significant when you're barely worth anything. And look at the sales growth. I mean, the sales are up 261% in crazy sales growth. But here's how you check the dilution. Oh my goodness. I'm so sorry. Yeah, you've been diluted by 5% year over year. So look at that. The net income is up by 5. Net income's up by 5, but the net income per share is flat. So yeah, you have been diluted a bit there, which is okay. McDonald's is a real estate company that also sells burgers. Yeah, and they collect royalties. Exactly. That's crazy. I love McDonald's. Perfect buy, never sell stock. I might be biased on them, but yeah, McDonald's. I have 15 shares of this company. They also pay dividends. Yo, no way, Tingrika. Thanks so much for all the little gifts there for the roses. I really appreciate you. If you got a stock you want me to look at, let me know. I hope everyone's having a great Sunday, by the way. And yeah, look at this. Because I own McDonald's shares, the dividend goes up every time because I just buy more shares. But yeah, I get $23 of dividends every quarter. Pretty cool. Hey, bro, when do you recommend holding stocks for the long term? Yo, again, none of this is financial advice, but companies with great growing fundamentals that I can trust, like a lot of these companies that I own in here, like an Amazon, a Comfort Systems, an Amphenol Group, just great financials. So BILL, earnings coming up this week, solid growth. So I used to own this what? Hopefully that didn't show anything bad, but I made a lot of profit on this one. I sold all my shares, all 11 of the shares I had at $95. Then a couple days later, it tanked. I bought one share, then sold it the same day. But yeah, and pretty much have done nothing since. So this company's unfortunate. Let's see how they're doing though. So no way, hey. Yo, give a shout out to Looney on the YouTube stream with the $5 super chat. Yo, thank you so much, Looney. If you got a stock you want to look at, let me know. Yeah, hey, best way to support me is head over to the YouTube stream. I'm streaming on there as well. It's really fun as well over there. But let's check out this. Thanks again, Looney. I really appreciate you, man. Hope you're having a great Sunday. By the way, I stream every Sunday at this exact same time. And every day of the week as well. I stream every day, but twice on Sunday. So here's Bill. Yeah, the net income went negative on this company. Yeah, they're not too bad. We use Bill. The sales growth is slowing. Sales are up 11. Net income went negative. Free cash flow is up 50%, but was negative last quarter. It's like a mixed bag here. I am curious to see what will happen with this company. I do have them. I'm watching them. I don't own them anymore, but I did make some money on them. But yeah. So let's see. SoFi and COF. Is that Capital One Financial? So yeah, after their merger with Discovery, this is a great business. I think it's worth having a bit of exposure to. The multiple right now, they just went through this merger. So look, they always make pretty much $1 billion in net income a quarter. They didn't actually lose $4 billion. That was the acquisition related stuff. And yeah, so that's why the revenue really jumped up. It went up 31%. The assets jumped up. So yeah, this is a pretty cool company. I think you get a nice, 1% plus yield. Capital One Financial is pretty cool. So let's look at SoFi right here. I do own them, by the way. By the way, we looked at UPS not too long ago. UPS, I think, is a dividend trap. They need to cut their dividend, but we'll look at them in a second here. But here's SoFi Technologies, a great fintech. I do own them, so I might be biased. I regret every share I've ever sold of SoFi, but Here's what I love about them, and here's why I think they deserve to be at this new 52-week high level. They deserve all this stock price appreciation because they're so growthy. Like, look at this. They're in fintech. They have their own banking charter. They have their own banking charter. Mm, sorry. And here's their financial services. This is the part I love about them. So I'm drinking my water here. So the financial services have seen some incredible growth. It's literally at a new record, up 105% year over year. So just incredible growth on their financial services, and their lending business is up 30% year over year as well. So both main segments of business are growing like crazy, and people are really starting to take them serious. They're really growthy. Sales are up 42, and they're making a lot of profits. Basically 100 mil in net income this quarter, net income every quarter, for the past year, when they used to lose net income every quarter. So yeah, people are just really starting to take SoFi serious. They're extremely growthy. That crazy fintech growth justifies stock price appreciation, I think. So, hey, Tingrika, thanks again for the 21 roses. I really appreciate you. So, what do you think of Tesla? So, to be honest with you, let's see if there's any news here specifically on Tesla. Oh yeah, Tesla launches the Model Y L, which is long version. Pretty cool. Let's see. Tesla faces investigation over delayed crash reports. Tesla expands FSD testing amid legal challenges. Anyway, there's some kind of cool news. Controversy over Elon Musk's 29 billion pay package, fire incident in German gigafactory. I like looking at the news sometimes, or the AI news headlines that they have. But anyway, if we judge Tesla the same way we would any other company, I think Tesla's I don't think it's worth $340. I wouldn't pay that valuation personally right now. The multiple is 200. So they're trading at 200 times net income. And it's okay to have a high valuation as long as you're high growth. But I mean, look at this. The automotive business is down 12% year over year. We can kind of just see that from their total vehicles delivered, fell by 14% year over year. So the automotive business is down by 12 and the energy business is down by 7. So they just lost the growth. And they lost the margin. So the total sales of the company are down 12 and the net income's down 15. It was actually down more than that. They did a little one-time adjustment to their little net income. It was actually under 900 million in net income. So anyway, they lost their margin. It's just a tough business. I get the future growth comes from the robo-taxi and all that, but I think it's a tough buy right now at 340. Just from a valuation point of view. I think I'd rather buy Palantir than Tesla right now if I had to pick one. Um, what happened? Oh yeah, hey Mac, what's up, dude? By the way, I'm on a brokerage right here where you buy stocks and stuff. If you want to get this old brokerage I'm on, it's in the link tree in my bio, very first link there. It's also an affiliate link, full disclosure. So if you go and deposit $100, we'll both get 5 free stocks. And or you can just go into Google and just type in Moomoo, which is a brokerage. But yeah, another cool feature that you can do, like you can see like these super investors' portfolios, like Nancy Pelosi's portfolio, Warren Buffett's holdings, and all his exact holdings, and we can see his recent changes. As we know, we can go to his new positions. Berkshire Hathaway just bought LAMR, the largest billboard company. He bought UNH, United Healthcare, 5 million shares. DR Horton, the home builder. So Warren Buffett has been buying a lot of. He bought more Pool, Constellation Brands, bought more SiriusXM for some reason. Anywho, let's keep going here. GLW Corning. Yeah, hey, Corning is a really great company. So BLMN stock. Hey, what up, the Ace? We'll check that one out too. So GLW, let's check it out. So, and we can look at Starbucks, Amazon. Remind me to look at these. I'd love to look at them. So here is Corning. This stock is pretty much at an all-time high. So it is tough to buy this one at an all-time high. But yeah, they're in optical communications. This business has seen a lot of growth. It's up 41% year over year. Then they're in display, specialty materials, automotive, Hemlock. So I like how diversified that they are. And yeah, revenue's up 20, but net income is up 300. So that was some nice growth of the net income. They made 500 mil this quarter. Yeah, it really was up 200%. That's ridiculous. So anyway, they deserve to be at all-time highs. They really do. I didn't believe the bottom line growth there. So BLMN, what is this one? BLMN. Yeah, then we can look at Amazon, Starbucks. So Bloomin' Brands. So yeah, dang, look at that. They're the same price as they were back in 2020. So they've been a tough performer. But yeah, look at this. This is probably why. So they have a 10% dividend yield. So that's a really high yield. This might be a dividend trap because if we go to the net income right here, like, yeah, look at that. So It's really choppy. So they made 26 million of net income a quarter. Let's go see how much their 11% dividend yield costs. So they at least, at the very least, have to make 12 mil. They just cut their dividend, so they at least need to make 12 million in net income a quarter. Actually, luckily, in the past 2 quarters, they have made over that. Um, Actually, those were some one-time adjustments. The sales are down 47. Anyway, I'd be careful with this one. I can see why they're not doing so good, but it's not the end of the world. But it's tough. It's tough. The super investor, yeah. Hey, are you into crypto? I like crypto, but I actually do not own any crypto at all. I do have some in Robinhood, which is like crypto proxy, but anyway, and I kind of regret not owning any crypto. Anyone's seen Bitcoin and Ethereum? They're like all-time highs. But I'm just happy with my stock strategy. I love companies that pay dividends or super growthy or just returning money to the shareholder. It doesn't have to be dividends. It can also be share buybacks or synergistic M&A. Companies that I believe will have really good stock price appreciation. And here's Amazon as well. Someone said, I love Amazon. There's a lot of like recent news around this one. Hertz is partnering with Amazon to sell cars on their website. Amazon just had a huge expansion of their same-day grocery store delivery business. So in like over 1,000 cities now, you can get your groceries delivered in the same day from Amazon. We actually did that not that long ago when we got the groceries delivered. Like one or two of the eggs in like our 24 thing of eggs were broken, and they just gave us a whole refund for the whole, not the whole order, but for the eggs. But they have great customer service. We were surprised, and they had anyway. The most valuable part of Amazon, though, is actually the AWS business, the cloud business. It's who knew? It brings the most net income because this business is over 100 billion of annual revenue for them. Just the cloud business, not their little grocery stores. But Amazon has been a huge margin expansion story. So check this out: the sales are up by 13. So sales are up by a nice 13, but profits are up by 34. So that means they're growing their net margins. They now have a 10% net margin. Used to be a single digit margin business, even negative margin business. So this margin expansion is so impressive at Amazon. I love them. So innovative. So innovative. I just followed you. Hey, what up, man? Thanks for the follow. He says, can we look at CGTX? Yeah, sorry if I don't get to all the stocks. I really do try to get to all of them. I go pretty quick with these. So wait, CGTX. And by the way, if you want to hit the follow button, we go live every day. If you hit the follow button, I'm sure you'll eventually run into the stream again and I can get to your stock. But yeah, here's CGTX. So yeah, this is a revenue-less company. So look at this. If we look at the revenue, it says 0 because they've never sold anything, not a product or a service. And if you're wondering why is the stock up 40% on a Friday, I believe it's because they got FDA approval. So that's headed in the right next direction. And that made the valuation go up by 40%. So that's great. I'd still be careful with that one. They're still a $200 million company, but that is good news. Amazon has a pharmacy service as well. Yeah, Amazon took over Walgreens. You know, you know, and a lot of Amazon just takes over so many businesses. They're crazy. Now they're coming for groceries. So let's see. Yeah, you look at EXE. What up, Pierre? So yeah, EXE stocks. So this is Expand Energy. So this one hasn't been doing too well, but let's go see. What time do you go live? I go live every Sunday at this exact. I do 2 streams on Sunday every Sunday. One around 12 and then one at 8 p.m. when the market opens. I stream for 5 hours every Sunday. 5 hours I stream for, but every other day I only stream for 2 to 3 hours. But anyway, usually during the market open or when the market is open, I stream. So anyway, this stock right here, EXE, is actually, wait, is this Exelon? No, Expand Energy. Anyway, so this is a natural gas business. 67% of the revenue comes from natural gas. Exposure to natural gas and commodities. But look at the growth here. Whoa. Sales went from 500 mil to 3.7 bill. And this was real. They really did make 900 mil of net income that quarter. That's really impressive. So, hey, I wonder if that's just from natural gas prices, but that's crazy growth. A nice 2.4% yield. So, yeah, that's actually pretty interesting. EXE, that's a natural gas play. So, should I do stocks or crypto? Yo, what up, ZIT? It's great you're new to investing. Your future self will thank you. But I really like stocks. Companies that you know and love. Like not financial advice. I'd buy the S&P 500, but then I'd buy some companies like an Amazon, an Apple, a Google, a Meta. Stuff you use every day. I mean, maybe McDonald's. I love that one. I got Amazon. All those companies I just listed, I own all those. So I don't just might be biased. But yeah, McDonald's is a great one. Google, Meta, Constellation Energy. Our utility bill is through our natural gas bill is through Constellation Energy, and why not buy some of the stock? So yeah, if I did want exposure to crypto, if I wanted crypto, the only thing I'd buy is Bitcoin and Ethereum. I wouldn't buy any other coins. I would just stick to Bitcoin and Ethereum. Um, so let's see here. Can we look at Eli Lilly? Yeah, what up, Fork? So Eli Lilly, this is that healthcare company. Um, they sell a bunch of different prescriptions here, and they reported earnings. They gapped down on earnings. The sole reason they fell so much on earnings was because they have this weight loss injection, and they made a pill version, a weight loss prescription pill. And basically, the results didn't work. The pill had bad results, and that's why the stock tanked over 100 billion in market cap. And I was like, that's overdoing it because they beat on every metric. They beat on revenue, they beat on net income by a huge chunk, they beat on EBIT by a huge chunk, they beat on every metric. It was just that one little detail that made the stock fall. So yeah, they have incredible pricing power as well. So look at that, sales are up 37, net income's up by 90. So yeah, the net margin was at 36%. You get a near 1% dividend yield here. So I really like Eli Lilly. Can you check O'Reilly? What's the name of the website? Yeah, hey, by the way, this is a brokerage right here, Tezos, where you buy stocks and stuff. If you want to get this little brokerage I'm on, it's in the link tree in my bio, very first link there. It's an affiliate link. Or you just type it into Google. It's just called Moomoo. But anyway, here's O'Reilly Auto Parts. So just like AutoZone, this is a great business. Even in a recession, people still, your car AC stopped working, your flat tire, something happens to your car, you got to get that fixed even in a recession. So basically, what is this company? How is this boring company have such incredible stock price appreciation? That's because of the share buybacks. They have a rule where over 50% of all the profits they make, 50% of that is returned just buying back their own stock. So it's an incredible shareholder-friendly company that makes up for the no dividend. So you get no dividend yield here, but they just buy back their own shares like crazy. So that explains why a company with flat net income for multiple years, basically same net income as they made in 2022, that's how the stock price has gone up so much just because of the buybacks. Anyway, all right, so top three stocks that are undervalued. That's a tough. I don't know. I like Progressive Corp, Coca-Cola right here. This is Coca-Cola Consolidated. As you can see, all these little buy orders. That's where I've been buying a stock. It's tough to buy anything right now. The S&P 500 basically hit an all-time high on Friday. So I'm not really buying anything. What I've really been doing the past couple weeks here is just been building up my cash piles. Like in this account right here, I have $900 of cash, and I don't mind. It earns me 4% APY. So, but yeah, it's tough really buying much right now. Well, actually, yeah, here I'll show you one stock I have been kind of buying. Check this out. Progressive Corp, ticker symbol PGR. The market's at all-time highs. This one isn't, and that blue line there is where I bought all my shares. It's basically exactly where I bought all my shares at. But yeah, Progressive Corp's pretty cool. I could talk all day about why I love Progressive Corp. Actually, I'll show you this real quick. So here's Progressive Corp, right? Here's the crazy part. Look at this EPS, net income per share growth. I mean, it's at a record. It's $5 in the most recent quarter. They're just so growthy. I don't believe it. Like, look at this net income on Progressive Corp. This is a company I can trust. Anyway, they're an insurance business. Some people don't like that, but you aren't doing any. Yeah, I don't really day trade, or I don't I don't day trade. If anything, I swing trade. I don't really buy a stock and sell it within the same day usually. But yeah, how's CEG doing? Yeah, so CEG, this is Constellation Energy. This is the second largest utility in the world. They own the most amount of nuclear reactors out of any other publicly traded stock. And yeah, I just love this company, man. Especially after their Calpine acquisition goes through. basically they're acquiring a company before the year ends. That's as soon as they acquire the company, it's instantly going to add $2 of yearly EPS and $2 billion of extra free cash flow a year to their financials. I can't wait for that merger to go through. Just waiting regulatory approval. So yeah. All right. Let's see here. Oh, Hims. Yeah. Hey, sorry, I forgot to get to that one. What mic do you use? Yo, I have a $60 Blue Yeti Nano. Got it on Amazon for $60. Pretty good mic. So anyway, here's Hims. I got it on Amazon Prime Day. I should have said that. I got it on Amazon Prime Day for $60. Great deal. Anyway, here's Hims right here. This is a pharmaceutical company. One bad news, there is some investigation into right here. So where was this? Law firm launches investigation into Hims and Hers following the NVO partnership termination. So basically, this company used to sell a weight loss prescription. They used to sell Ozempic on their website and led to a lot of the growth of the sales. Now, Novo Nordisk out of nowhere abruptly ended the partnership and doesn't allow them to sell that weight loss prescription anymore. So that is going to hurt their future growth. But for right now, the business is doing amazing. I mean, the growth of the sales are incredible. Revenue's up 72% year over year. Insanely good growth. Really good net income as well. 40 mil this quarter, 50 mil last quarter. So, over 200 mil in net income a year. So yeah. Yeah, I'm a college student. Yeah, hey, I'm not an expert. None of this is financial advice. What up, Hugh? He said, you. Nuclear power is in the fashion right now. So yeah, I love nuclear. The administration is not they're removing incentives from solar and wind. It's like they don't like solar and wind anymore, and they like nuclear. There's a lot of incentives for nuclear energy right now. Pretty cool. Anyway, but here's uranium or energy fuels. It's basically a uranium stock. And as you know, nuclear reactors are powered by uranium. Yeah, look at that. 93% of the revenue comes from uranium. I don't think they really have any revenue though. Well, actually, yeah, a little bit of revenue, but that's a uranium play. Also, if you're really looking for other uranium plays, check out ticker symbol URA. This is just the uranium ETF. If I had to pick a uranium stock, if I had to choose one, I would absolutely pick ticker symbol CCO. Maybe UUU, but I haven't done too much research on them. But CCO is the best uranium play out there. We're starting to buy uranium from Canada instead of Russia. So, yeah. So, oh yeah, Starbucks. I forgot to get to this one. Starbucks, honestly, is a bit tough right now. So this is the tough part about Starbucks. The margins have collapsed over here, and that kind of explains why the stock has been flat for a while. Starbucks is the same price that it was since 2019. So here's the bad news. So, and you can kind of just understand this logically. I mean, just look at this net income and these declines. The same time last year, the net income was $1 billion. Now it's only 500. Okay, I have to fill out a CAPTCHA on TikTok. Okay, hold on here. Sorry, TikTok made me fill out a CAPTCHA during the live stream for being AFK. Okay, well, anyway, look at this net income. It went from $1 billion to just $550 million. It fell 50% year over year. And this is the scary thing. So look at this. There's still a lot of net income. They made $560 million of net income, but here's the bad news. Remember that they made $560, but the dividend cost $690 million in net income. So they at very least need to make $690 million of net income just to afford the dividend. And they can't even afford the dividend the past 2 quarters. The payout ratio is too high. Bit of a leveraged balance sheet as well. So Starbucks is just in a tough position right now, and I can kind of understand why they've been struggling. Let's hope the new CEO can help them out. Charlie, oh yeah, hey Charlie, by the way, I'm on a brokerage right here. Yeah, if you want to get this little software I'm on, it's where you buy stocks and stuff. It's in the link tree in my bio, very first link there. It's an affiliate link too, so full disclosure. Or you can just type it into Google, just a brokerage called Moomoo. But if you sign up with my link and deposit $100, we'll both get 5 free shares of a stock. So full disclosure. Uranium comes from, what up, nobody? How's it going? So, let's see. What are your thoughts on UPS, bearish or bullish? So here's another. So we just looked at Starbucks. We just saw Starbucks has an unsustainable dividend payout ratio. This is another company that I believe, if things don't turn around quickly, is another company that has an unsustainable dividend. Sad to say. So look at this. They have a 7.4% dividend. Incredible yield. I wish it was sustainable. So look at that. You get 7.5% of your money back just from a cash dividend. But here's the thing. Look at the most recent quarter. They made 1.3 billion, 1.2 billion last quarter. Well, let's just say they made 1. Dang, the cash flow tanked. What? Anyway, but let's just say they make 1.3 billion of net income a quarter. Well, here's the bad news. Where's the dividend cost? Did I scroll past it? There's the dividend. Okay. The dividend cost of 1.35 billion. So that's the unfortunate part. They couldn't afford the dividend this or last quarter. So they at very least need to make 1.35 billion in net income. And you really want to see them making a significant more of that, because if they only make 1.4 billion, still they have no leftover money. All of it has been sent to the dividend. So I honestly think that one might have to cut the dividend. Um, so yeah. Yeah, hey Looney, I know what you mean there. No, like if you that's the thing with Bitcoin. Like if someone sold you every share of Apple, like if you bought every single share of Apple that existed, you're left with a business that makes free cash flow and net income and all this profits. But if you end up owning every single Bitcoin, you own every Bitcoin in the world, you don't really have anything after. So I get that argument. Um, Let's see. I'm bearish on UPS. Yeah, that dividend payout ratio is the only thing that makes me struggle with them. What about MP to Chinese mineral mining stock? Actually, MP Materials is not Chinese. Actually, this is a company that the U.S. government owns a big stake in this company. I wonder if we can find that news. Um, anyway, yeah, basically the reason the stock has gone up so much is because the U.S. Let me see. Yeah, let me make sure they're not. They're headquartered in Las Vegas. So yeah, this is not a Chinese company. But yeah, this is a rare earth mineral play for the US. The US bought 10% of the shares. They want to open up this one rare earth mineral mine that will literally supply the US for the next 50 years for certain precious metals. So that one will take till like 2026 to really recognize some of that revenue. But yeah. Hey, what up, Mohammed? He said, can we look at Enphase? Yeah. Can people make a living on stocks without not that's not how you should really look at it. Again, the whole point of investing is to kind of preserve and build wealth. Like you should make 8% a year and you compound that. So in my opinion, not financial advice, my goal of investing is it's slow and steady. I turn $100 into $108 in a year, and then I snowball it. Then the 108 goes to 120 in the next year, and then the 120 goes to 100. So it's not get rich quick for sure. Not in my opinion, stocks aren't, but there's a great way to build and preserve wealth. So anyway, here's Enphase Energy. This is a solar stock, and there's been a lot of solar incentives being taken away, but for right now, the business has recovered, which is good. So they're now making net income every quarter. I remember back when, it's still down from their peak, but they used to make 150 mil a quarter. Then it went negative. So it is good to see that they're now making net income still. But yeah, that's just, if you want exposure to solar, Enphase Energy or First Solar are the only two I'd buy. If I wanted exposure to solar, I'd only buy FSLR or Enphase Energy. Those are my two picks there. So yeah, because there's a lot of way worse solar stocks, and Enphase is one of the better ones. The Enphase is a converter play. They do the AC to DC inverters. So AMDL, I think that's just the AMD ET. Wait, AMDL. So yeah, that's AMD, that should just be the 2x. So yeah, basically whatever AMD does, if AMD goes up 1%, this goes up 2%. I do have some AMD shares, by the way. I'll show you that real quick. They're one of my larger holdings in here. Yeah, I got 11 shares of AMD. We're up 34% on them. How's the overnight market doing? Hey, look at that. SoFi's up 2.4. Futu's up 2. AMD's down, though. Zoinks. All right, so yeah. That's the AMDL ETF. Yeah, no problem, Mohammed. BMR ETH will make $1 billion a year, cash flow 3%. Oh yeah, you can stake Ethereum for like a near 3% yield. FWONA. Oh, Liberty Formula One. So this must be that car company. So check that out. Liberty Formula One is publicly traded. So yeah, 91% of the revenue comes from Formula One. And look at that. All the revenue comes from the UK. Is this a screen recording? No. Hey, what up, Sam? No, this is my real account. Yeah, by the way, I'm on my second TikTok account because TikTok banned my main account for 3 days from live streaming. So that's why, again, best way to support me is just subscribe to my YouTube channel. It's called Nathan Robert. Just hopping into YouTube. I'm trying to build up my audience there. But yeah, here's Formula One. I mean, look at that. They made They made a nice chunk of net income this quarter. So anyway, they're pretty interesting. And no dividend on that company, but that's all right. That's Formula One stock. All right, so let's see here. This for real to say? No, that's my second account. So my only two. No, hey, don't report. That's my second account. But yeah, my only two TikTok accounts are Nathan underscore Robert, and it's Stocks Live. Those are my only two accounts. I also have it in my link tree in my bio. So if you go to if you go to the official Nathan Robert TikTok and you go to the link tree, like the fifth link there it says like my second TikTok account, and it'll take you to this account. So yeah. But I do appreciate your suspicion. There are so many people impersonating me. Just know I'll never follow you, DM you, or anything like that. I don't sell anything. I have no course, book, Discord, WhatsApp. I'll never follow you or DM you. But anyway, let's look at Rocket Lab right here. Ever since their Geost acquisition, let's see, where is that? Rocket Lab announces for 5 satellites. Yeah, they completed the acquisition of Geost. This is great news because they're already a pretty growthy company. Like, look at this right here. The space systems revenue is up 28% year over year. And so the space systems revenue is up 28, and the launch system business is up 58. So both segments of business are growing like crazy, and that doesn't even include the Geost acquisition. So the growth is going to be even more. Look at the analyst expectations. It's going to keep on growing. So anyway, very growthy company. It's my favorite space stock. It says, yeah, I do have a Discord, nobody. There's only 3 people in it. But yeah, I technically do have a Discord, but it costs $1 to join. I don't usually like to promote it ever because, but let's see. Michael Saylor said, oh yeah, dude, Michael Saylor, he loves MicroStrategy. Yeah. Um, let's see. Hey, thank you, Josh. I really appreciate that. Yeah, I hope y'all are having a great Sunday, by the way. I'm not going to be live for too much longer, so if y'all want to hit the follow button, I appreciate that. Yeah, before you go, hit the like button. I'd appreciate that. So here's Micron Technology right here. Nvidia competitor. We get Nvidia earnings next week on Wednesday, so watch that. That'll be interesting. Here's the thing about AMD though, or no, I mean MU right here. The computer networking business has been growing like crazy. Look at that. It's up 97% year over year. So very nice little growth over there. And look at this. The total sales are up 36. So sales are up 36, but look at this bottom line. They're printing net income now, close to $2 billion a quarter. If we zoom out to last year, this is a major improvement. You couldn't buy the stock back here. They were losing $1 billion to $2 billion in net income a quarter. Now they're making $1 to $2 billion net income a quarter. And you get a dividend yield here. So anyway, Micron Technology starting to have a comeback. I liked him. Oh, hey, thanks, Teddy. I appreciate that. What stocks are down overnight? Well, let's see. Well, every stock in here, unfortunately, Google, Meta, but let's see. Apple's down, Robinhood, yeah. And AMD's down, T-Mobile, Reddit. Not down by much, though. So let's see, PSKY. Hey, that's the. I wish I could give you more thoughts on this stock, but basically, this is the Paramount and Skydance merger. It's like a streaming service. The merger's good. This TV media business is a slow burner. Like, look, it's just going to decline like probably single digits every year. So it's tough. The TV media business is declining, but the streaming business, their direct-to-consumer streaming business has been growing pretty nicely. It's up 15% year over year. So yeah, I'm curious to see what will happen really after the merger goes through. There were so many regulatory issues with the merger. So I can see why it really had such a gap up when the merger actually went through. Yeah. Wish I gave you more thoughts on that. But yeah, they're interesting. TeraWulf is crazy. Can you check it out? Wait, TeraWulf. Oh yeah, so this company got like a really big deal from Google. So if we go to the news here, if you number 2, TeraWulf secures $3.2 billion Google investment, 7% of all the shares are being shorted. But anyway, that's really interesting that they got an investment from Google or something like that. Anyway, it says 100% of the revenue comes from their digital currency mining. So I do wonder if they're like some Bitcoin mining company. I don't know. But anyway, it seems like there's a lot of good news around that company. Thanks. Yeah. Hey, thanks, Fork. I appreciate that. I know they signed a big contract with UFC. Oh, really? You know, the UFC, actually, this is a really cool stock if anyone's heard of them. Perfect ticker symbol TKO. TKO stock is at a close to an all-time high. If you're wondering, what does TKO own? Well, they own WWE and the UFC. So they license out the rights to UFC to other companies and they collect like high margin royalties and stuff like that. So yeah, pretty good. The net income really exploded in the most recent quarter. Look at that, 270 mil. Pretty good. So anyway, that's TKO stock. And that was the stream, my friends. I hope you guys have a great rest of your Sunday. Again, if you want to hit the follow button, we go live every Sunday at this exact same time. And the best way to support me is just subscribe to my YouTube channel. Actually, best way to support it is to not only subscribe, but like watch a video. It doesn't help out the channel, I think, if like you subscribe but never watch a video. But anyway, yeah, YouTube channel is called Nathan Robert. I'm also streaming on there. If you missed anything, you can replay it. The very beginning of the stream is really interesting. I went over Sprouts Farmers Market, and I do a whole portfolio update. Yeah, if you want to see every stock that I go on, how much I'm up and down on every stock, I show that all at the very beginning of the stream. But anyway, yeah, I hope you have a great rest of your day. No way. Hey, shout out to Looney right here, bro. This is why the YouTube stream is great. Hey, thanks so much, Looney. I'm trying to build up the YouTube stream, but he donated another $5 on the super chat. See you next Sunday as well, man. Have a great rest of your day. Where can I reach you for business inquiries? I don't really have any way to if you DM me on TikTok, if you I'll for sure see your message if you want to join my Discord. Hey, Joseph Kelly, how's it going, man? But yeah, I hope you guys have a great rest of your Sunday. I'm gonna end the stream here, but yeah, have a great one. I don't have TikTok. Yeah, I really should have a business email. Leave a comment on my YouTube channel and I'll get back to you. If you leave a comment on any one of my videos, say, do you have a business email? I'll reply to you by tomorrow, a business email. Okay. But hey, see you guys later. Have a great rest of your Sunday. If you wanted to, please hit the like button before you go. It really does help out. And if you wanted to subscribe button, we stream